Exodus chapter 15, verse 2. The Lord is my strength and my song, and he has become my salvation. This is my God, and I will praise him, my Father's God, and I will exalt him. 1 Corinthians chapter 10, verse 13. No temptation has overtaken you that is not common to man. God is faithful, and he will not let you be tempted beyond your ability. But with the temptation, he will also provide the way of escape, that you may be able to endure it. Philippians chapter 4, verse 13. I can do all things through him who strengthens me. Isaiah chapter 41, verse 10. Fear not, for I am with you. Be not dismayed, for I am your God. I will strengthen you, I will help you, I will uphold you with my righteous right hand. Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you.
Good morning. Man. What's up, Tony? Welcome back. All right, so how was your week, bro? You have a good week, Tony? Pretty fascinating how pretty much everything that we've talked about has come to fruition for months. Last week was no exception. That was taken out. This was taken out. The other two kind of stayed in, in their little range or whatever. No, don't say that. Never say the negative stuff. Remember, if you made a mistake or you didn't hit something you wanted to hit, it's okay because you're just learning. It's the process of learning. Positive reinforcement. Once I master patience in this one, yeah. See, so there's things that people overlook most of the time. Because our understanding about certain things is at a particular level when we begin. We just don't know what we don't know. See, there's this thing right here. Let me actually pull this up real quick. So this is the stages of learning, okay? Can you see that okay? I don't know why it doesn't want to allow me to make it bigger. Can I zoom in? Yeah, there we go. So if you look at this, unconscious incompetence, that's when you have no idea what the hell is going on. Then it goes to conscious incompetence. You're slightly aware of the skill, but you're not proficient yet. A lot of people get stuck in these two areas. They'll be aware of things, and then, they know what an order block is or what it looks like. They don't know what it is, but they know what it looks like. Fair value gaps, they know what it is, what it looks like, but they don't know how to use it yet properly, right? And then you get to conscious competence. You're able to use the skill, but you have to put a lot of effort into it. It's still kind of rough, kind of difficult. There's still a lot of things you don't know. And you have to really be intentional when trying to engage something. And then unconscious competence is obviously the goal, where it's just like an automatic thing. Like you can just hop on and your intuition kicks in, right? So you need to be able to gauge where you're at in this And all throughout each of these phases of learning, especially in this industry, you have to be very gracious with yourself, because every time you make a mistake and every time you attach any type of negativity to it, even if it's just like, I'm disappointed in myself, right? Simply that can lead to hesitation, because you'll be in the market and you'll remember, oh man, I was disappointed, so I don't want to be disappointed again, versus changing that mental framework to, I made a mistake. It's okay. I'm learning. I still got a long way to go. But I'm progressing through these phases. So it's not like sports where we could give ourselves harsh criticisms to pump ourselves up and be good, because this is so mental that, if you're in the market or you're trying to get into the market and you have the the negativity from a past event, again, it's going to lead to underconfidence. Underconfidence leads to hesitation, versus, over confidence, right? Which will lead to over trading, forcing things. So there's a balance that has to be established, but all through that process, all through the learning process, and, just the balancing of the highs and lows, that type of process, we have to be very gracious with ourselves, because if we're not, I'm telling you, I've been through so much in my life that it was just unconscious. I was just unconsciously being negative, and beating myself up over things that in this industry are unnecessary to beat ourselves up about, especially if we have, less than 3 years experience. We haven't hit profitability yet in a demo or in anything else. It's just very important. This is the mental aspect. There's technicals, and the mental aspect needs to also be very very focused on early on, because the mental aspects will damage the technical aspect. So part of the mental process that I teach my students to look at, or advise them to look at or think about, is that positive thinking. You have to work on multiple things, right? Your relationship to money, risk management, technicals, targeting, the size you use. You got to figure out where you're comfortable with. The mindset situation, and then everything else that's a subcategory that we always talk about in terms of the technicals and fundamentals. So all these different things are being worked on at the same exact time. So you can imagine, in a school, everything is a little more obvious as far as where your mistakes are, where you can improve, what you're lacking. In trading, it's a little more difficult, and that's why it takes so long. You can learn the technicals like ICT has mentioned in a year or two. Like, you can know what an order block is, how to somewhat use it. At least you can know the concepts. But then going in and engaging consistently and being confident in your engagements, obviously there's a process that has to be learned, along the way. Yeah, and obviously experience, or borrowing experience like you guys do every week, can be extremely beneficial. But again, just going back to what I was mentioning earlier about the sometimes the feelings of disappointment, us failing in certain instances, we have to change our mental framework, how we view that. Because if we're constantly saying we're disappointed, you add that up over a decent couple of weeks, right? And you're going to look back and look to engage, and you're going to be hesitant. You're going to really question yourself. Do I really know? Am I really learning? Right? Is this really going to be something for me? Like, those thoughts start to creep in if we don't get ahead of the default thought processes, which are negative, because our brain's trying to protect us from pain. And we attach dreams and goals and what we want to achieve in life to this industry when we try to do this. And if our perspective as far as what's normal, and if our perspective on how to manage our mindset isn't correct, or it's not guided in the right way, that's why people quit. That's why people feel like this is impossible. And for some, it will be impossible, because they will refuse to make the adjustments that are necessary, and they will refuse to change the behaviors and the thought processes and just how they view this stuff. in the learning process, it's like nothing else on this planet. Nothing compares to the daily things that we have to go through as traders. We are the type of people that are openly accepting the fact that we're going to face failure potentially on a regular basis, and we're going to still have to try to figure out a way to be positive through that so we can continue to learn and stay motivated. And that will never come from us attacking ourselves, beating ourselves up over mistakes, or just voicing that, we're disappointed in ourselves. There's nothing to be disappointed about. There's things that you can improve upon. There's, obviously things that we may not know early on, and there's things we still have to experience and overcome in order to, get to where we're looking to get to. So, I just want to remind you guys, I talked about this last week too, and I gave a drill to do, which I hope to hear that some of you guys took it upon yourself to go do, which is simply get a piece of paper. It's a thought analysis tactic that ICT apparently was taught by a psychologist. And you pretty much just get a piece of paper and you track your thoughts all week, all day, every single day. You don't have to make it like a interrupting type of thing. But every time you can catch yourself thinking about something, analyze throughout the day, throughout the weeks, do it for like a month or, more, however much you want to do until the problem's fixed. But you get a piece of paper, you analyze your thoughts throughout the day, throughout the week, months, and you calculate. Every time you get a negative thought that comes to your head that you can recognize, you put it on a piece of paper, right? Tally it. I had 560 negative thoughts a day. So you can imagine, and some people obviously are worse. Sometimes it'll get up to thousands. I had a student that had 1,700 negative thoughts in a day, and he was wondering why he was depressed and feeling so negative towards his learning and his image of himself. So it's very, very important to do this little drill. It's highly effective, and it puts obviously it may be uncomfortable to see the result of that. But again, if you have issues in trading when it comes to psychology, this is an amazing way to highlight wherever the problem is and then really start to mentally analyze the things that are making you think so negatively, or just allowing certain things to come to your mind that are not serving you, and then you can start making adjustments from there. So instead, when you catch yourself, right, say you tally up the thing, right, the amount of negative thoughts after like a week or a month or however long you want to do it for. Well, you see how many it is, and then you go in and start thinking, okay, what was I thinking negative about? And then try to see if you can start to practice reframing or reshaping your mental process when it comes to thinking about whatever it is that you were thinking negatively about. Okay, because the way you live your life, the way you think about things in real life, and then you come into a high stress environment that you're putting all your goals into, all your dreams and hopes into, you want to make sure that you're being very cautious with this stuff, and changing the way you're seeing things in real life, aside from just the charts. Because again, the way you live your life, if you're unorganized, if you're sloppy, if you're not disciplined in real life, if you have very bad habits outside of trading, all that stuff is going to carry in. The market is a mirror, okay? And the way we are as a person will directly impact our ability to effectively deliver when it comes to engagements in the marketplace. Again, just going back to what I said earlier, it is unlike anything else that you will ever do in your life. It's not going to be the same solutions. Some stuff may be similar, but it's not going to have the same solutions to fix the problems. It's not going to be something that generally happens overnight unless you can, quickly start to develop habits, or remove the bad habits and put some new habits. Some students I have they're really good at that. They can change things on a dime. Like they don't have to sit and put too much energy behind fixing stuff. They'll just do it. So, but that wasn't me, right? And maybe it won't be you either. And it may take you a little bit more time, like it took me, to change certain things and get better at certain things. But that's okay. It's completely fine. As long as we're making progress, progress is still progress. You know what I mean? And it's better than no progress or keeping things the same and expecting different results, which is the definition of insanity. Okay, so yeah, I hope that's helpful. Again, I hope that a lot of you guys took what I said and are going to apply it if you haven't already. It's a very simple thing. Just get a sticky note, get a piece of paper, or do it on your phone. If you have like a notepad on your phone or something, right? Because if you can't improve upon something you don't track. If you're not tracking your performance, if you're not tracking when you're doing well, when you're doing bad, if you're not tracking your mindset and the things that you want to change, how are you going to fix it? It's just going to be lingering there, and that's the last thing you want, is a lot of these negative things hanging over you, and then say you pass a funded account. Because the first instance that things go wrong, or if you make a mistake, it'll be back to the other way of thinking, or back to the old habits that led you to blowing accounts, and then it will result in a blown account again. We're creatures of habit. That creature of habit aspect of things, when it comes to us as human beings, it's relevant in your mindset too. Okay, we don't recognize a lot of times that we are doing certain things because we're unconsciously competent at being negative, because it's ingrained into our hardwiring in our brain, because it wants to protect us from pain and danger. And if something makes you feel bad, the instinct your brain has to protect you from danger, which is fight or flight, will kick in, and sometimes irrational things will take place. So you got to hack into that by doing these little things that I've just mentioned. And there's other stuff you could do too. Books you could read. I have a pretty nice sized list of books for psychology and different things in the free community, in Discord, and in my private community, obviously. And of course, I talk about this stuff all the time, and the reason I do, which some people don't like, which that's too bad, then you can go watch somebody else. But, the things that I talk about, which people don't like, are generally the things that are extremely helpful. They're extremely needed, because I could teach you every technical aspect of this and you will still fail. You'll still blow the accounts. You'll come back and see, me catch this or catch that. And then you'll think why is he able to do it? Why am I not able to do it? And most of the time it'll be because, maybe I have more experience applying certain things. But at the same time, it'll be the back end work that you guys haven't seen or never saw that has turned me into the trader that I am today and given me the consistency that I have. The technicals can take you far, but you got to have multiple things. Even when it comes to the technicals, there's multiple layers to the technicals, just like there's multiple layers to your mindset. And again, people want signals. They want me to come out here and just tell them the bias, okay? And I could do that on a regular basis. But even if I tell you the bias every single day, which I do in my private community and a lot of times in my Discord too, or at least I share the premise. But even if I do that, bias isn't everything. Because if you have a horrible mindset and you have a model that you like and you're able to find it, you're not going to be able to hold trades long enough. You're not going to be able to capture even the minimums if it gets profitable at all, because you could rush it. You could enter at the wrong time. You could enter when there's not enough things in alignment, right, that are actually, providing evidence that your model's showing. There's many, many, many mistakes that can take place, even though we have a bias, and a lot of it comes back to mindset, how you're thinking, how you manage stress. That's another thing. If in real life you don't manage stress well, everything is constantly a crisis, this is gonna bleed into you as a trader. So again, just similar to what I said about the negative thoughts, creating a drill around that to try to rewire yourself to get you away from the things that aren't serving you. You'd have to do that type of process as well. For anything that you have a problem with when it comes to your mentality. Okay, so see, I hope that's helpful. Don't discount it, because I'm telling you right now, you may know all the technicals. I've had people that have been trading for 8 years, 9 years. One was trading for 11 years, and he just kept failing. And he came to me. Both of them came to me. And I'm like, I don't have more experience than you. And they're like, yeah, but you're performing better, so you clearly have the answers to something that I don't know. Time isn't always justification for better skill, So the things that, I share are, they're very important. And of course, you're going to pick and choose and do what you will with certain information. But, it's worth considering. All the different things we talk about create what it is that we do here. And they present us with the consistency that you guys see and the trust behind what it is that I do. The trust is another thing. It's developed as you get better at things. You don't just date somebody for a day and think that, you know them completely and you trust them entirely with your life. And it's just, all you needed was 2 days. No, it takes a good amount of time. And for you to get comfortable with something like this, that is so difficult for many people, so super technical, has many, many aspects to it, from mental to technical. You got to expect that it's going to take a little bit of time to not only learning can be pretty quick in terms of how to use certain things and what is what, stuff like that. But developing the trust, like for example, the risk on, risk off that we do, right? The bonds and yields, the different relationships that markets have, trusting the higher time frame when you're trying to be a scalper and catch these quick, fast-paced moves every day, right? It takes time to trust the higher time frame, and you can't rush that because the higher time frame is going to only go as fast as it's going to go, So it takes time. Everything takes time, and that's why this is not realistic to master this in just a couple months or off of one video. That's why you have to be here constantly, and then eventually, at a random time for everybody, everything will just start to click. And I hope that a lot of you guys that spend time with me on a regular basis, you're starting to see certain things that fall into place that make other things make sense and start building your confidence slowly but surely. Okay? So, so I hope those things are helpful to you guys. Again, Tony, I want you to do your best to try to limit the negative thinking, the attacks on yourself, because, there's nothing for you to be disappointed in. If anything, if you look back on the last couple months since you've been here, even if you make a mistake, you should still be ecstatic. It may not be moving the way you want it to because, there's still bumps in the road that we all face. But, it's nothing to allow, to take space up in your mind. You made a mistake, or maybe you didn't perform the way you wanted to. It's going to happen, And right now, there's so much stuff taking place that could change anything at any moment because of all the announcements and wars and all these things. It's even less reasonable to beat yourself up in circumstances like we have. Obviously, there's opportunities, but experience is shining in these types of environments. And casualties of war will also be a result of what we've been seeing in this financial battlefield. Okay, so and if any of you guys that are on here that have been listening to this also deal with that same thing, just remember, beating yourself up is not gonna be helpful. It's not gonna help you. It's just gonna make it harder. It's gonna make it take longer. You're gonna take 2 steps back every time you voice something like, "Oh, I'm disappointed," or "I'm so stupid," or anything negative along those lines. You may have taken 20 steps forward, but now you're taking 15 steps back now, because now that's in your mind. You've brought it to life. You've acknowledged it, that now there's this negative thing that you've allowed yourself to pay attention to. That doesn't mean be oblivious to your mistakes. Doesn't mean be unreasonably delusional. You still want to obviously acknowledge, but then work on them, but think of them in a different way. If you make a mistake, analyze why you made the mistake. Be grateful that you made the mistake, because guess what? You now have something clear that you can look to improve upon, and it's not ambiguous. Maybe you overtraded. Okay, great. I now know, you probably have already known if you deal with overtrading, but you now know again that you have to improve upon overtrading. So it just makes the rules that we talk about more important, right? 1 to 2 trades a day, Why? Because it stops you from over trading, and it limits the amount of risk. If you take 1 or 2 trades and you follow the risk rules we employ, there's not a chance you'll blow your account unless you have like 20 losing days, depending on how much money you have in the account. But yeah, so I hope this stuff is helpful. Again, it's not super exciting stuff to talk about, but it's something that all of us have to face. All of us have to contemplate these types of conversations with ourselves. And if we don't, and we try to push it under the rug, and we just continue to do things that we need to improve upon, and just keep doing them incorrectly, reinforcing bad habits, it's just going to be a never-ending wheel that we're running around that's going to keep us in the same space. And, that's not what any of us want. We want to improve and be the best that we can be. So, that takes us doing specific things and not doing other specific things. Okay? So, yeah, Tony, I hope that was helpful. And everybody else that's been listening, if you guys deal with the same problems, I like when you guys voice it so that I can talk about it, because there's other people, I'm sure, that deal with the same thing that Tony's going through right now. And, what other students have been telling me they've been going through. The very common issues: over trading, over leveraging, negative thinking, unrealistic expectations, and whatever else, So yeah, that being said, let's just take a quick glance at the economic calendar. So we got a bank holiday, so the day before, day of, and day after a holiday. For those of you that have been here for a while, what is our mode of operations given the day before, day of, and the day after a holiday? How do we view that? How do we behave as a trader if we're operating the way that we do here? Any of you guys remember? Let me know in the chat.
I really want to see.
Oh, sorry about that. Yes, let me know in the chat for those of you that remember, or you could just say you don't remember. That's fine too. Yes, low probability, reduced risk. Day of a holiday, preferably you can't trade anyway, right? But yeah, low probability, reduced risk if you're going to take a trade at all, right? Expect that things are going to be harder to trade. Okay, that's just the way it is. Why? Because the bank stops the market, and then all of a sudden it kicks back in, so there's an overflow of orders that were already placed in the marketplace. So holiday volume is going to be what takes place. It's going to consolidate. It's going to, potentially just gap towards something. So the risk is very much elevated. Tony said we observe the market and analyze expectations that we see on the charts. Yeah. So you guys have been listening. We've had a couple of different perspectives, right? If you must take a trade, it has to be, like Chawezi said, low probability and reduced risk. That's the perspective. Or you could do what Tony said, and we just observe and analyze expectations and just wait until the day after, right? So if Tuesday's the day after the bank holiday, our best opportunities will most likely end up coming around on Wednesday, Thursday, and Friday this week. The charts tell and show us what we're looking for, or what we're looking at, and what we're waiting for. Exactly. Okay, so that is kind of like the landscape. I'm expecting not really much to take place. Sunday, we may have a gap because Powell's going to speak, so there may be some fireworks that take place. Doesn't mean you take a trade. Sundays, for those of you that don't know, I don't ever take a trade. I haven't taken a trade on a Sunday in about 3 years, okay? And I do just fine, and you will too, So yeah, that's going to be the things that we do. We will be live on YouTube again on Tuesday. So yeah, we'll see what the damage is, and we'll see if we get an opportunity to validate the perspective we have when it comes to day before, day of, and day after holiday protocol. Okay, so hopefully there is a good lesson there. And of course, Wednesday, Thursday, Friday is going to be when I'm personally going to look to engage something. I probably won't engage on Tuesday. It depends. If I do, it's going to be half risk because of what Chawizi said. And yeah, it's just the way it is. Okay. And, the market has taught me that lesson many times over the last almost 6 years. So, yeah, it's worth listening when the market speaks, and it damages your account. So, yeah, Wednesday, Thursday, Friday is going to be our main target for reasonable expectations to take place. But yeah, that's the landscape for the news. So going on to our next stage, which we always do, it's looking at the yields, okay, or the bonds. You could do either one, doesn't matter, first. But as you could see, I talked about this order block last week, if you go back to the video, and I talked about this delivering. If it stays above that, and we stay above the midpoint, it'll continue going higher. If not, it'll end up, oops, I got had the wrong one there. Yeah, I said if this was going to stay above this here, this order block, if it reaches below it, that's fine. It could just hit the weekly order block, and it needs to stay above it. We counted our 3 PD arrays to the downside, which are acting as our validation to continue seeing price go higher. As you can see, all those levels have been respected. Price used even this up wick here, the midpoint, as a beautiful launching pad. And we didn't even trade back to any of these volume imbalances. It disrespected this order block, right? Just slid through it once more. And then we just blew out the previous month's high from April. Okay, so again, target was up here too, right? Even back here, we were talking about this specific phenomenon taking place. And because everything has been supported and continued, we see that our overall target has been fully met. Right, so we now also have another one up here. Okay, so again, there's a cracking correlation going on between the bonds and yields relationship and the DXY and the indices. Okay, so we want to be very cautious. You got to stay very cautious in this. When the bonds and yields are acting foolish, that's automatically telling us that there is a elevated risk environment, aside from other assets being cracked and correlated, or cracked in correlation as well. That's the first gauge as far as high probability or low probability, or smooth, clean conditions versus higher risk, sometimes less likely conditions. Okay. So yeah, it's first stage. So looking at this monthly chart, again, we came all the way up into here. I'm going to be curious to see if this is going to act as a rejection block. Okay, so let's actually start to clean this up a bit. Get some other stuff on the chart. Okay, so we now have, we closed above this big wick up here. So as you guys know, we use the up wicks and down wicks as support and resistance. So we're going to use the up wick here, keep our quadrant levels available, and we're going to observe how it's going to respect that. We also have this large monthly wick, so we want to definitely take consideration of that as well. This large wick trading through us getting above this high should be able to allow this to act as a balanced price range if we are going to intend to get up above this monthly high. Obviously, if it starts to break down, it may look to want to dig a little deeper into the wick here. If we're just looking at this time frame, though, we have the mid portion of this wick, we have the mid portion of this wick, and then we have this order block. Okay, so the only way that this monthly perspective overall turns from bullish to bearish, we need 3 PD arrays to be violated. Okay, so we got the up wick here, the wick here, midpoints of both of those. We have the order block here, the midpoint of that order block. We also have this volume imbalance here on the monthly chart as well. So you can see how the statement I have said multiple times, where narrative doesn't change on a day-to-day basis, but bias can, because it sometimes retraces in like a bullish environment. Same with the bearish environment, right? Or it may consolidate, then continue to go. Okay, in line with the overall narrative. The narrative doesn't change from one narrative to the next unless, the way that we do things is violated, right? With three PD arrays being violated, in this case, opposed to the upside delivery. So any retracement will be looked at as, we're reaching to a discount array to go higher, right? Unless, of course, it decides to, really start to smash lower and then break some of these levels. Then we would then start to consider potential overall changes in the narrative. That is not relevant right now, at least in this market. It's, some of the other ones are consolidating, stuck inside of a range. If you go from this high to that low, we could see that if we map out equilibrium, right, we're basically hovering around equilibrium. Let me ask you guys this. Maybe there's some of you guys that are on that have heard this before. What can be expected if we see that price is at a higher time frame equilibrium and it's bouncing around, right? Or it's just really close to it, not really moving away from it yet. What does that tell us about the conditions? What kind of condition? Is that promoting a trending environment, or is it promoting a consolidation? What does a higher time frame equilibrium present us if we see that price is hanging around it? Let me see if some of you guys are here that remember that. Consolidation, exactly. Right, so if price is hanging around, what's up, my brother? Nutty Fafa, glad to see you're here. I was worried, man. I was like, where's my boy at? Yes, absolutely, consolidation. Absolutely. Okay, if we're in a consolidation too, I talked about this last week on the lower time frame on the NASDAQ, and it pretty much delivered, which I showed in both of my communities. But if we're, say, bouncing around consolidation, when price is going to decide to displace away from that consolidation and start to break out, most of the time it's going to break out from returning to that level again. Okay, so it may get above it. If it's going to go higher and attack the highs, this is going to be significant in terms of timing when price is going to go, right? Generally, it'll obviously happen towards like a news event or something, because remember, the higher time frame uses news events similar to the way macros deliver on the lower time frame. So the macros for, say, a swing trader will generally be based on news events. Okay, so if you want to see a higher time frame level met like this high up here, just for like an easy example, or even this one, a news event is going to be needed because institutional sponsorship will take place. And again, if we're in consolidation, a lot of times that we use it as a launching pad. If it's going to be a time when price has a good news event and we've already been consolidating, and then it may end up being time to attack whatever level it's reaching for. But then at the same time, if price is just kind of hanging around or reaching into an equilibrium point after like a retracement, until it pushes away from it, we're potentially going to be stuck in consolidation, especially if it's a higher time frame equilibrium. Okay, so yeah, hope that makes sense, you guys. One of those pretty helpful things over time. Again, it takes time to study this concept, but if you go in and observe this and pay attention to how this behavior takes place when it comes to consolidations, you will be pleasantly surprised. Okay, I definitely want to remind you guys, if you do support the channel, if you like the content I provide, definitely don't forget to like the video, subscribe if you haven't already, and share with anybody you think can give value or add value to our amazing community of amazing people. Okay, it's much appreciated. I'm really grateful that you guys always come and spend time with me, and have been getting value and seeing improvement based on some of the things we've been talking about, because that's the whole purpose of why I do this, So yeah, so thank you guys in advance. But yeah, so this will pretty much be all I am paying attention to on this higher time frame, on this monthly. So let's drop down to the weekly. Okay, we see this large wick here. Obviously, it's overlapped with the other one too, but this large wick here, when we drop down to this weekly perspective, we could see how prices traded through it. There is a gap in here, Maybe it wants to return back into it a little bit, but we'll see. But overall, if this move here is going to be the move that has began this run higher to take out this high, if that is going to be the target, then we're going to want to see the up wick here, similar to this up wick that we just outlined. We want to see the midpoints respected, because if a wick is overlapping, say a fair value gap or a previous candle, like this, for example, especially if it's a fair value gap of some kind, many times that wick is going to create a balanced price range. So then when it trades back into it, it should be able to act as a support level when you're observing order flow, and then it should just be able to continue. If it digs too deep into it, we got to start anticipating, again, 3 PD arrays, keeping in mind the higher monthly time frame levels. But in this case, we would then jump right back to the wick midpoint, volume imbalance, this order block, and then of course coupled over that is the monthly midpoint of the wick. Okay, so these are levels of validation for us to continue to hold our assumption that price is in fact going to want to get up into this monthly high up here. Okay, so because this was so aggressive, because a higher time frame level has been taken, and we're going to start into a new week, it's the end of the month as well, so maybe it looks to cap the bullish run that it's done. Because the current month, May, we basically delivered all bullishness. So if we go to the monthly candle, it's just a massive bullish candle. So the end of the month, right? The month has power 3, right? Weekly, monthly, daily, everything has power 3. So we got to think about it from this perspective. So it may look to try to retrace a little bit, maybe attempt to get back into this wick, and maybe it's going to close there. Or again, maybe it just runs up as a result of the ending of the month, which I don't think is going to blow this out to end the month. I think we'll, most likely stick around in here a little bit just to cap the monthly range. But generally, towards the end of the month, beginning of the month and the end of the month are more difficult, because the beginning of the month, thinking of power 3, generally presents us with manipulation and consolidation. The middle of the month, like the 2 weeks in the middle, are generally the best weeks to trade, because you're going to potentially catch the monthly expansion portion of the monthly range. And then, of course, the weekly ranges inside of that are also helpful to engage when it comes to power 3. But yeah, so we'll see if it wants to cap the monthly range. I think that's what is in play here, at least for now. There's not really any news event that I feel could be significant enough. We also have a holiday, so that's just another day that gets taken away. So, we'll see. I could be wrong. It could just accelerate, right? I don't think it's highly likely, but yeah, we'll see. All right, so let's go back to that weekly chart real quick. Yeah, so those we have our invalidation levels for bullishness. Again, I wouldn't be surprised if we open up and start to decline, reach into these levels in here, or maybe it just comes back and gets stuck inside of a small range to cap the monthly range. So those are some scenarios we're going to keep in our mind as we move forward into this coming week, the last week of May. All right, so yeah. But yeah, so we got this gap in here. It may act as a target. Okay, price may target that. The middle portion of this wick, if we do see some form of maybe price opens up, rallies up to the middle portion of this previous week's wick, hits maybe it can't even get to that, or it does get to that, and then we displace. If that type of thing takes place, we may see a bearish power 3 take place for the coming week to cap the monthly range. Okay, so I hope this perspective's making sense. It's just I'm trying to highlight the importance of power 3 in navigation, from all time frames, and how you can start to map out a narrative, thinking of obviously the way that we view the higher time frame, certain important levels, but then also overlapping that with the dynamics of power 3, so then you can think about different scenarios that could take place in terms of higher time frame delivery, where it could reach for, what could potentially happen, so that when you get to those lower time frames, as price is printing real time, you're able to have these seeds planted in your mind, and you can build off that experience you'll gain from that perspective, because power 3 is the market. Okay, every single candle has it. It's the most common thing that shows up aside from fair value gaps. It's just like it is what it is. So the better you can get with that, the more clarity you can get with Power 3 and some of these other higher time frame concepts, the better. Okay, so yeah, I think that's all I'm going to talk about here on the yields. Right, there's not really much else. Again, we have the gaps in here. Maybe it uses this upper one as a target for next week. Maybe it opens up, rallies, uses Power 3, hits or can't hit the midpoint, and then displaces lower. In that case, I would have the wick here and then the gap in here, maybe even all the way down to the wick here, which was on that monthly time frame for a target. Otherwise, right, if it opens up and can't get through the midpoint of this wick here, and then it just starts to displace, like rampages through these things, we have this previous week's high here as a target. We have the wick that's been created, all the quadrants in that, those are each a target of themselves. And then obviously we may end up getting to this monthly high if it does prove that that is what it wants to do. Okay, so I'm going to keep the narrative bullish because nothing's changed, but the bias could either retrace to cap the monthly range and just play around in here a little bit more, or it could fail to try to reach down into here and quickly try to breach this high before we end the month. And then from that high being taken, maybe it does a deeper retracement. Again, that can either happen as a result of this high being taken, or we may be seeing that take place here. We do have SMT between the three as well. That could support that if we do see some form of a displacement to start next week. So yeah. I mean, Powell could come out on today when he speaks in a little while, and literally make the market gap all the way up into here, take the high, then viciously look to decline, because the yield markets rallying the way they are is extremely artificial from what I've been hearing. There's really no reason for the yields to be doing what they're doing, and it's of course cracking the correlation between the yields and the DXY. And it's kind of having an effect on many assets. Okay, so yeah, so I think that's all I have to mention for the yields. Just take a glance at the daily chart. So we can see that it's retraced, got the midpoint of this order block here. Notice the wick, so we'll see if that continues. Same with this, we got an order block here. It's tapping into that bullish order block. We got an up wick, we got a volume imbalance, and we got a bullish order block, and we have that large wick we outlined, which is this one as well, right from that weekly chart right there. Right, if you go to the daily here, you can see the largest wick from the monthly time frame. We have those layered levels as well, and it seems like this is just a retracement. Right, if you go from this low, most recent fractal low that started the big run, to the most recent fractal high that started the retracement, we basically came down to an optimal trade entry level, hitting 3 different PD arrays in a market that's still trending higher with a pretty obvious target that's above us. So again, we want to see how the week's going to open, whether it rallies up, maybe fails and declines, maybe get us below this to target these lows or the just the wick midpoint, or if it's going to stay above this, maybe try one more time, sweep Friday's low, which is what this is. Maybe it purges that, then displaces back above Friday's high, and then looks to maybe attack to the buy side. So again, these are just some scenarios I'm thinking about going into the week. Obviously, none of us can know for sure because there's no for sure 100% in the market. But we have a pretty strong way of mapping things that has proven to be effective, and it seems like that's going to potentially be the case here. But we just got to see what it's going to do because it's the end of the month. It may retrace, or we may blow out the highs, then retrace. Either way, there's going to be some form of a retracement at some point, okay? In terms of where we're at in price, and then of course the fact that it's the end of the month and we've been extremely bullish. Okay, so yeah, if these levels hold, again, that's going to continue to trust buy side. If we do get displacement, again, we'll just be flexible and adjust to target sell side. But I'm going to favor going into this week, price keeping this wick intact. Maybe it wants to reach down there. I'll afford that type of behavior to sweep Friday's high, Friday's low. Then if it can do that and displace back above, we got Friday's high and all the other levels I've mentioned. Okay, so I hope that makes sense. Now let's move on to the bonds. So we called for the low here to be taken. That low was taken, as we talked about, pretty much exactly the way we talked about it. We've been talking about price going lower in this asset, since the breaker here was outlined. Okay, for those of you that have been here a long time or been here for the last couple months, or since this area formed, or since we blew this high out, because we talked about that as well. Once it got below this low, we've been talking about price seeking sell side from this, because unless this breaker was to be violated, the wick, the high here, and the middle portion of this order block slash breaker pattern slash balanced price range, if that was violated, that would have pushed us into the opinion that price is going to go higher. Because that didn't happen and our process is effective and we trust our process, we've been able to continue to trust that this is going to go lower, which it has done. And it blew out every single target we've identified, and everything has just been amazing. Okay, it's done exactly what we've asked for it to do or anticipated it to do up until this point. Right, so again, we swept the low here, so something similar may take place. It may look to use next week to retrace, then decline, trying to target even further sell side. We've already blown out the rest of that fair value gap, but we still have this monthly low, similar to the way that we have the monthly high up here, because these are reverse correlated, remember. So I'm going to expect the opposite view for this market. Right, we may open, go higher, hit the gap in here, respect the midpoint of this wick, then decline. Or it may look to try to, come off of this low and maybe try to dig a little bit higher to cap this big bearish candle, and then just try to dance around in here until maybe next month, which then may deliver us down below the low. Okay, we're going into June as well. June is generally a consolidation style characteristic for the most part. I don't know about this year because there's so much volatility, so many things taking place and hitting headlines. We may not see much of a consolidated month overall, right? There's still going to be moves. Even in consolidation, you guys know we can navigate. But obviously I probably have to do a lesson about navigating the consolidation environments. We'll do that when we encounter a scenario related to that. But yeah, so pretty much everything that we talked about over here on this asset is just going to be applied to this, but in the reverse. Okay, so yeah, I think there's not really much more to say about this one because that is just what it is. Okay, so we got a fair value gap in here. We got a down wick, right? And we got the swing high up here. So preferably we'd like to see it stay below that and then look to continue, maybe get below this fair value gap, use it as resistance, and then that may be a trigger to send us down, at least below this low. But again, we may see price open up here, rally, sweep out Friday's high, because that's where the most recent liquidity is at, most near term, from these higher time frames. It may sweep that, then displace. If it was to do that, then displace, get below the fair value gap here. I would use that as a framework to then try to seek even further sell side targets. Okay, so yeah. So again, just to reiterate, everything we talked about in the last market, it's the same here because this is a reverse correlated asset to the yields, but it's just in the reverse. Okay, so if we were looking to possibly see things hold to the buy side and all the things we talked about for the buy scenario on the other market, it's just going to be applied to this in the reverse to try to seek sell side. Okay, validation levels are the same, invalidation levels are the same, characteristics we want to see or not see that are the same. They're just in the reverse for this asset. Okay, so yeah, with that being said, let's move on to the currencies. So yeah, let me actually pull up my Discord real quick and show y'all something. I'm sure you guys know we have literally called this entire delivery like since the start. Okay, like from price going lower, where it was going to go lower to, how it was going to behave, wick, if it was going to be respected or not. But overall, narrative has still stayed bullish. It was just going lower to go higher, and obviously that played out. I'm going to take you guys back to the first week of May. Okay. Oops. Don't know what the hell happened there. So the first week of May, if we go pull up some of our assumptions, DXY2 played out, right? Been calling for this to take place. If you go look at DXY, did exactly that. Blew through it a little bit, but nonetheless, narrative has been correct the whole time, as always. And then, of course, we go back to the currencies. See it here, right? Just to show prowess, okay? It's not necessarily the best one. I don't know. I cut it off a little bit. Let's go see where it went. Just pulled it up earlier. There it is. So if we zoom in, this was May 2nd. Notice where the target was headed above these highs. Once it got down to the weekly fair value gap, this wick here, all the logic that was explained in great detail there, as well as a balanced price range. Price came down. Then you can see how prices did exactly that, targeted the exact place. Just so everybody knows, if maybe you're watching this for the first time, I didn't just place this last week. This has been here for literally 1, 2, 3, 4 weeks, and it's been the overall narrative or bias within the buy side narrative that's been taking place. It just took a while to get there because of all the crap going on in the overall economy. So yeah, now that we've taken out the buy side here, let's actually move to the monthly chart. Okay. Took out the buy side liquidity here. Okay, full target was met. This is a weekly fair value gap. You can't really see it here, but that's what it is. Price came down below the low here. Now we've blasted through the high. So what is this up candle? If it's going to continue going higher, what is this candle? What's the importance of this candle? What is this candle? Just let me know in the chat. What kind of PD array is that? A breaker block, exactly. Exactly. So what are we going to anticipate if we're going to continue to want to see price go higher in this asset? If we were solely looking and making a determination based on this time frame, which is the highest of time frames for the most part for many people, right? What do we expect to see? How's price going to behave with this this breaker block, right? What do we need to see in order to continue to confirm that we're going to go higher? Which level needs to be respected within the breaker? So let me know in the chat. Oh my god. I spilled freaking water all over me. Holy crap. The level within the PD array. So within the bullish breaker, which level do we have to see if this was the only time frame where we're going to stick to? If we're going to continue to see that this breaker is going to hold and be reliable for a bullish run, what level needs to be respected? The line in the sand, essentially, for a breaker. In this case, a bullish breaker. What specific level? Well, the high first and the 50%. Exactly. Nutty Fafa. Exactly. That is how you navigate or use or validate or invalidate a bullish or bearish breaker. What is a breaker? What is an order block? Just, let's see if you guys know. What is it aside from a PD array? What is that sequence of events creating? a breaker or an order block, because they both have this same characteristic. Let me know in the chat. And if you guys don't know, you're about to learn something right now. Something very, very, very important, which most people don't know. Anybody know? So yeah, what is a bullish or bearish breaker? What is a bullish or bearish order block? Where proof start or rejection from? I guess that could be somewhat part of it, but I'm looking for a different answer. You guys don't know? I can't remember if I've said this on YouTube. When I say it, it's gonna click on a big light bulb. Okay, so ICT has mentioned before that most people that talk about bullish, bearish, order blocks, breakers, and a couple other PD arrays, he many times says, yeah, they know what it looks like, but not many people can tell you actually what a bullish or bearish order block or breaker is. What is the sequence of events that's taking place? What is it creating? It's creating a balanced price range. That is why the middle portion of a bullish breaker or bearish breaker or order block, and like the upper portion, needs to stay respected, because similarly to a balanced price range, just a traditional one, which there's like a good amount of different ones aside from these two sequence of events creating a balanced price range. There's many of them, but these are two of them, right? So that's what they are. That's what they're creating. They're creating a balanced price range. That is why they are so dynamic, because balanced price ranges need to be respected, and if they're respected, it's going to be dynamic away from it. And if the middle portion of that can't hold up, then the balanced price range is going to fail. And then what does that lead you to think? That leads you to potentially have a flexibility to then frame out potentially the other way. Because if bullish balanced price ranges are being disrespected in a bullish trend, you might be getting caught in a consolidation, you might get caught in a retracement, or you may just be wrong entirely and it may turn around on you. But if it continues to respect it, you're stacking balanced price ranges. And it's also putting you in a position where a dynamic move will take place. What people don't realize is a lot of these PD arrays are creating balanced price ranges. They just are different sequences that are creating those balanced price ranges. That's why they are so important and dynamic. That's why they are so useful. And that's also why you only need one, because there's multiple ways the balanced price ranges get created, right? But the effectiveness, when you're able to anticipate the one that you like, I mean, it's unrivaled. So yeah, that right there is something extremely like exclusive. Many people don't know this. And I talk about that topic ad nauseum, and all the, it's like 15 other ones I talk about in my private community. But that, when you're thinking about PD arrays, you want to keep that in mind, specifically with what we're talking about here, which is the breakers and order blocks, changing the state of delivery, right? Those of you that have dug into that, what is that creating? For one, it's creating a change in the state of delivery, but what is it leaving behind? A balanced price range. What is that change in the state of delivery showing you? An order block. So you could see how you could break down these PD arrays And it gets you a lot of times to the same thing, which is a balanced price range. That's why it should hold. And then, of course, if it takes liquidity, then does it, I mean, it's just, things just start to really stack up upon itself. And this is a huge step forward for you guys. You may not realize it. Maybe some of you guys do know. But that is such a huge step forward in terms of PD array understanding that, it's incredible. That's why you can trust certain things if you can identify the proper order blocks and fair value gaps and can, frame things from that higher time frame, but then also couple this logic and understanding. Right? So if anyone ever tells you what is an order block, what's a breaker, now you know what it actually is. So you guys know more than 99% of people on the internet now about what that is. What is an order block? What is a breaker? What are most of these other PD arrays? Let's talk about this too. You guys have heard ICT's Venom model, right? What is the Venom model leaving in place as well? It's leaving overlapping fair value gaps after a stop hunt. What is an overlapping fair value gap? Like this. Let me see. See if I can find a good example. I'll give you guys one more example, right? One more, because I'm feeling generous today. Overlapping fair value gap like this. What is that creating? Why did it stop there? Just because? No. This overlapping phenomenon after taking stops creates a balanced price range. So the middle portion of that overlapping sequence of fair value gaps respects the mid portion. So it launches it away because it doesn't have to go through it. It balanced price and it was in a bullish trend. So as a result, price explodes to the buy side or to the sell side, depending on where it's at. So when you're watching price, you now have a couple different elements to add on top of it to do what? Build trust. To what else? To build clarity as far as reading price, anticipating what's going to hold, what's not going to hold. And now you know why most of the time they're going to hold. When they don't hold, what is that telling you? It's giving you more intel. It's giving you intel for the other side now. So if it holds, if it rejects and breaks through something you think is a balanced price range or are anticipating as a balanced price range, you now have a way to be flexible and reliably then switch your opinion to possibly seeking the opposing side because now you see a balanced price range getting destroyed. Yeah, Nutty Fafa, you remember. I've sprinkled it in here and there, but I don't think I came out and started mentioning or putting such a highlight. I think maybe I did before. Maybe I did before. There's some new people that hop on, so maybe this is a good thing for them to catch. Maybe it's a good reminder for you as well. Hopefully, right? But yeah, this, I'm telling you, this is a huge step forward for you guys. And obviously, there's depths and depths and depths we could take this, obviously. But, I think that'll be a very helpful thing for you guys going into the rest of this month and the rest of the year, just beyond for like the rest of your career as you become more effective. But yeah, Nutty Fuffa, you remember, bro. You're like a sponge. You be doing very well too. It's amazing to see. So yeah. Maybe that'll go over some people's heads, but hey, they'll see the light eventually. But yeah, so given the breaker and what we just talked about, if this is going to continue to stay above that, what is the reason for us to think that the narrative is going to change from bullish to bearish anytime soon? It's not, right? The bias it might have a retracement, but that won't change anything. That just means that, since we're in a bullish narrative still, and it hasn't changed on the higher time frame, any short side take are going to be utilized in lower risk capacity, because that is just the way I do things when it comes to counter trend trading. I could just go full risk, but I don't, my tactics have gotten me this far, and I feel like they're going to continue to get me even further, as has been the case for you guys too that have been applying the stuff we've been talking about. So if it ain't broke, don't fix it. You know, so what's the point? Maybe eventually increase whatever it is that you're doing, but even then, when you find something that works, why try to fix something that is working flawlessly? There's no need, you know. So yeah, we keep it simple. I try to keep it simple, but obviously there's ways that you can make this super advanced, which obviously I have that level for many that come to me. I want that more advanced style. That maybe they have, like I said, 5 or 6 years, and they're just trying to find the things that seriously will amplify the stuff that they have that may already be working, but they just want to maybe tighten up some loose ends. But yeah, it's definitely, like I mentioned, a massive, massive leap forward for those of you that really study and maybe you have less than 3 years experience. It's unrivaled, you know. And when I take entries, keep in mind what I've just mentioned, you know. Keep in mind these things, because since you've been shown this and told this information and everything else that you get told, when you go into the market, you'll never be able to overlook it. If you study it for a little bit, it'll just be something that becomes a part of you. It's sticky. It's very sticky. There's lots of concepts that ICT teaches that are so sticky, it's ridiculous, because you can't look away from it. It's there, and it's obviously there. It's like you clear the fog, and now it's super visual. Even if you're not like super professional with it yet, it just pops off, you know, and you can't escape it, you know. So yeah, hopefully this is very, very sticky to you guys that have just heard this for maybe the first time. But yeah, 95. Always, bro. You can't expect nothing less. You can't expect nothing less. Pure gems, okay? That's why we're here, right? But yeah, so yeah, that's pretty much my opinion for what I think is going to possibly take place here. Let's just drop down real quick. Again, so we got this large wick here. We'll see if price can use that as support. See if it can push price higher. We did take the high up here. There is SMT between the two currencies. But of course, if DXY is going to continue to fall, which, you know, is going against what the yields are doing, at any moment that could change. DXY could skyrocket and everything else could just take a dump, you know, because it's super manipulated in the yields right now. The interest rates are being very much messed with. So again, it'll kick back into symmetry at some point. The question is, when is that going to happen? And none of us know when it's going to happen because of all the uncertainty. So we got to proceed with caution and keep all the things that we've been identifying in mind. And if the market doesn't prove that it wants to do the opposing thing, like even if things are cracked in correlation, if the market does not show it wants to go lower, why are we going to force it to go lower? We have validation rules and invalidation rules that help us know when things have changed. So if things have not changed, why are we trying to change things? You know, just stick to where the wave is pushing. You know, the ocean's going to push you around if you try to go against it. So you might as well just catch the wave and, you know, surf that thing. You know, so it's been serving us well so far. So, you know, we'll continue to do what we've been doing. So, yeah, weekly fair value gap, right? All these levels that you see here have been talked about continuously over the last couple of weeks. So it's, you know, not really new to most of you. So, yeah, we're going to keep that in mind. I could clean some of this up, though. Some of this stuff is irrelevant at this moment. That bullish order block, we talked about that in my private group. Bounced up. And, yeah, came up, pierced all of it. So, yeah, I wouldn't be surprised if we open up, given the fact that the month's been super extremely bullish, similar to the other asset. What was it? It was the yields. They've been rallying. It's not surprising if they do look to maybe cap the monthly range and maybe give a decline. Maybe it comes back down into this weekly fair value gap. Right there. Right, maybe it uses that as support again. Let me see. We do have a high up here. So that is, whoops. That's potentially going to be the next potential aim if it is going to continue to rampage. So yeah, we're just gonna have to wait and see what happens. We may look to want to again retrace a bit. We got this wick in here. We got this previous candle. This is Friday's low. Okay, Friday's high. That's our first liquidity pool aside from everything else. So if it's going to go higher, it's going to take out Friday's high. It may look to take out Friday's high and then look to target Friday's low, right? So purge this liquidity, trigger them in. Everybody's euphoric, trying to go higher, and it may look to cap the monthly range. That concept, that conditional awareness or characteristic identification, something that happens all the time, the dynamics behind what price does in terms of power 3, that stuff comes in handy dramatically because it's, it just does, so yeah, it's just the way it is. Some stuff is just the way it is. So if you discount power 3, hopefully this will wake you guys up to not discount power 3, because it is, the basics are if you master the basics, it'll take you really far versus you trying to learn every single advanced new topic that comes out from whoever and trying to implement everything all at once, kitchen sink approach. It's better to just master the basics, and the basics will carry you much further than the opposing view. Yo, what's up, Sufi? And how are you, brother? Happy you hopped on. It's good to hear from you. But yeah. So yeah, just keep that in mind too when you guys are learning. Basics mastery of the basics, strong foundation will carry you much further than you trying to figure out all these different freaking, different opportunities and ways of doing things or different perspectives. The basics are bias and narrative. How do you figure that out? Power 3, what's your model? Correlation, interest rate analysis, seems a little advanced for some that just get started, but it's still it's one of the basics. And correlation is the topic, right? How the price action in your asset relates to the other assets. Okay. Something you could also observe too, this high here. Okay, in this candle leading to the downside sweep, then price rallying up. That's a shift in market structure. This is also a potential bullish breaker. So what happened when it got above that, right? Remember what I just talked about, right? If you take that high to that low, price can't return back to the middle portion of that if it's going to continue going higher. Did it ever come back there? No. So was there any moment in time where you should have been anticipating the price was going to reverse? No. So, just right away you can start to see the impact that concept is that I talked about earlier. You could see how important that is, when you know what a breaker is and an order block is, and, how it's truly, or why it's truly important. Okay, and how it can help you anticipate and trust and build clarity and so on and so forth. Okay, and just a side note, that, explanation of what those two things are is very much similar when it comes to a lot of the other ones too. I'll leave that for you to go study. All the other PD arrays, right? It's just different ways of looking at things because things look different sometimes, but they can generally lead you to very similar characteristics. Okay, and I've been good, Sufi. Man, you're in the private community, We do very well over here. I'm grateful to hear from you. I haven't heard from you in a little while. You've been posting some stuff. But yeah, man, send me a freaking update. What's everything been like, yo? Yeah, shoot me a DM, Sufi. Just give me updated with what's been taking place, what you've been discovering, how things have been. But yeah, so given the fact that we swept the highs up here and we got the failure swing up here, go to the weekly chart, we got basically SMT. I want to see what that's going to lead to. Either way, we're at the end of the month, so it may look to want to decline to cap the monthly range. So yeah, that's going to be my perspective. We got a wick here, right? So that may be a target. We got this fair value gap here, that may be a target. And if those things get traded into and it just accelerates, maybe it's going to blow this high out, which could then be the initial target. We had the previous week's high here. That previous week's high is also Friday's high, and we also have Friday's low. So if it's going to decline and reach lower, it may look to target that, but I'm going to just anticipate, price, maybe it wants to dig down there, then go higher, or it may do a very shallow retracement to try to blow this out. Depends on how excited they get. There's not really any news that's taking place, so. And hell yeah, Nutty Fafa, dude, I told you, once you learn market maker models and see it from a perspective that we talk about, and see how universal it is, how it goes to every single market, every asset class, every time frame, how larger market maker models have little market maker models forming on the lower time frames, how each phase of the higher time frame market maker model has a market maker model inside of them in itself. How we're always in some form of a market maker buy or sell model, like this retracement here. Okay, this lower movement to go higher created a market maker buy model, right? If we're going to go lower to go higher, you got to think market maker buy model. If we're going higher to go lower, it's going to create a market maker sell model. Okay, it's all over the place. That's why I love market maker models, right? Breakers were my first model I used that gave me clarity, that passed me my first funded account. Breakers and Power 3, and the standard deviation idea that we've been talking about in the private community, which is taught in ICT's mentorship. But yeah, Tony, that is absolutely right. It leads to insane awareness. Remember, everything I talk about is from a lens of clarity. How can I give clarity to those that want to listen? And I feel it's been pretty nice. Every retracement to continuation to reversal. Yes, Sufi, exactly. Gears are turning, brother. Exactly, 100%. I hope you've been studying that and seeing that, because now you'll never be able to unsee it. And the clarity you get from that is absolutely ridiculous. And the confidence and confirmation you can get from that is insane. It's just, and then you apply the things we talk about in the higher time frame in terms of narrative and bias identification in that process. You merge it with these things, and it's completely ridiculous. It's like, holy crap. Like, you could walk this like a dog, like we do. It makes sense as far as why it's so accurate here and how we're able to call the market, consistently, because these things are constantly playing out, and it won't go away. And since you've seen it, you're now infected, even worse than you were when you first learned ICT or started looking into ICT concepts. And now it'll never go away. It'll be just there forever. It's all random. I had some dude comment on my Instagram post like a week ago saying, "Oh, ICT's a scammer. He sucks. He's this. He's that." I'm like, "Okay, sir, why don't you come and just watch a couple live streams I do and tell me that it's fake? Or am I a scammer too? Am I just like getting lucky?" It's pretty amazing luck if that's the case. And I haven't really been a lucky person, to be honest. Yeah. It's definitely going to feel pretty insane. And then, the more you experience it, right, all these different ways of doing things, and the more you keep getting exposed to the experiences you guys have here, the experiences that you have on your own and your own studies, I mean, it's just going to be a never-ending, just like, mastery process. It will end at some point. You'll get to a point where you feel like you don't have to learn anything. I don't feel I have to learn anything. I feel like I have everything I need, because all 10 of those subjects that I mentioned in the free Discord and the private community, in terms of trader development and process planning, if you can get a process, attach it to all 10 of those, or a couple of them that can attach to each of those subjects and subcategories, you'll never be able to convince yourself or let anyone else convince you that you don't know what's going on. It's just, it doesn't make sense. It won't make sense. It's impossible, because you will know. You do know. And it happens over and over. So, you're going to be even more convinced every single day, than you ever were before. So yeah, and then I'll have, a bunch of savages watching me, and then y'all call some opportunities, and, we'll just be crushing it together. which is, it's been the goal, so you guys thrive and succeed. And then maybe you guys can pass it on to your family as well, like I have been trying to do with my little brother, which has been a pretty amazing process, if I do say so myself. He's been sharing some ideas, which is pretty amazing. But yeah, so I guess we'll leave it there for the currencies. It's either going to open up, decline, and then go higher, or it's going to open up, rally, take out Friday's high, then go lower, and then maybe cap the monthly range. Okay. Yeah, Sufi, you've been seeing that? He's just been sharing it. He hasn't been trading for more than a year, So I'm telling you, the wonders, the wonders and benefits. Sorry about that. That you can get from being around the right people, being able to borrow experience, it's unrivaled, because you can't transfer experience, but you can let someone borrow experience enough. It's like an apprenticeship. Why do they have an apprenticeship? Well, they sit there and they shadow the best of the best, so then they can later emulate what the best of the best is doing. And a lot of times in this, you got to also be able to emulate the mindset, which is something I share continuously. Some people don't like it, but I don't give a shit. Okay. And then you can also emulate the technicals too. The more you see it, you're just borrowing experience, and then it just adds in. Then eventually, before you know it, it's like Jade, right? The Jade Master story that ICT talks about. Every time you come in here and we point out the process and go through it, and you're studying it, you're holding the answers to the problems you're trying to solve, and then eventually, you'll get to the point where you're just like, hey, like, I understand this now, when, maybe a year or two ago, you could never imagine that you are where you're at that time. It slowly happens for everybody. On your own, it'll take longer. Together, we go further, faster, right? So, that's the thing. But you got to make sure around people that know what they're doing, And unfortunately, if you're not giving signals, some people don't think they're in the right spot, when in reality, their mindset is keeping them from being around the right people. I'm literally at that point where I know, yeah, yeah, 100%. And Sufi, bro, in the private community, bro, we're just... I share the premise on YouTube and everything, and Tony and Nutty Fafa, they're reaping the rewards too. But man, the private community is just insane. Mind you, we go live every single day in the private community, so it's an everyday thing, right? Like, maybe 1 or 2 days out this month haven't been exactly clear, and we just kind of sat back. But then we come in the next day or next 2 days after, and it's just like boom, 100-point move. 100-point move, 100-point move. It's crazy. And of course, all the way from Sunday up to the end of the week, everything that gets talked about here on Sundays comes to fruition. So it's crazy. I'm seeing Badudo. Yeah. That's the unfortunate thing. See, but that's the thing. You took it upon yourself, even though you can't always be there to participate during the New York session. You took it upon yourself and still chose, like, hey, I'm still going to come and see what's happening. And you can see that there's more value than just that, than just the New York session and stuff. Obviously, that's when we're live the most. But you can just see, all the different things that take place. And there's students in there that are killing it too, sharing their own perspective. Some trade the PM session, like Mark, a.k.a. Bullfrog, one of my top students. He's in there trading till the last hour, and just sending out crazy moves. Harley's over here crushing the hell out of everything. And it's crazy. And all their stuff is there. So you get to see their stuff, their own models. So you get different perspectives, but all of it comes back to ICT concepts and the way that we're piecing this stuff together as a group. The way that we're organizing stuff is very unique. And the different tactics that are more highlighted than others, based on just kind of, what I feel are non-negotiables and stuff like that. But you still get to use your model. Like Sufi, you're still using the optimal trade entry, right? Sufi, you're still sticking to the optimal trade entry, or are you adding some other stuff? Want to know? I use everything now. Okay. You're like, whatever I could see. I mean, dude, we talk about like multiple models, and we talk about things like very evenly, whether it's breakers, YouTube model, optimal trade entry, continuation variations of everything. It's just like, yeah, let me tell you this though, Sufi. If you ever get stuck in a feeling where you think it's paralysis, right? Like you're feeling like, okay, I see stuff, but I'm not able to execute because I think I see too much. I want to narrow it down. Whenever you feel like that, just focus on one, and try to push yourself into that one. Because of course, you're trying to learn really quick, right? You've went through a lot of concepts, you see a lot of stuff all the time. So I don't want you to get too like thrown in too quick. You kind of did what I did, right? Tried to get as much as possible, as quick as possible. But eventually, you're still going to want to do some back testing and studying on each individual model, just so you could see which one works the most for you, which one you see the most. So then you can have that as a baseline, and you have to test it. Excuse me. You have to test it for like 6 months. Each model, whatever one you have. I only have 4 models. Market maker models, breakers, the YouTube model. For the most part, too, I have different frameworks. Right, I got Power 3, market maker models on every time frame. Stuff like that. I got other concepts that I don't really talk about much, but I've mentioned, like the purge and revert concept. That's a one of YouTube model that ICT mentioned years and years and years ago. It's still relevant today. TGIF is a framework that I use sometimes. The weekly expansion plays, right? One shot, one kill. I use that as a framework. I don't hold trades too long, but the one shot, one kill framework is something that I utilize. Obviously, these are some things on the back end that I have in my mind that I've spent time studying in terms of frameworks. There's others too, but it's a testament to the time I've spent, the experience. It's years. I've been able to accumulate these things. Yes, sir. But the one I actually use is changing state of delivery into a higher time frame PD array. Yeah. That's a good framework to use as well. Just frame certain things in the higher time frame. You can even look for like the YouTube model delivering on the higher time frame, like the daily, and then you can use that as a tactic to gauge bias, right, or to gauge narrative when you think price is going to move. I've also talked about recently the fractal high idea. The fractal high idea definitely worked out for the NASDAQ on Friday. Okay, so obviously there's a lot of different things that we incorporate that you've been getting exposed to, each and every one of you, especially the students in my private community. They just get just more, they get more time with me on the chart in private calls. So if you said, to be honest, all the same framework, higher time frame liquidity sweep or fair value get PD array, lower time. Yeah, exactly. See, man, it's crazy, dude. Let me ask you this, bro. How much do you think you have just leaped in your understanding from before you met me to the time you've been here? Or how much of a leap would you say that has been? Has it been, noticeable, super leap, or just like moderate, or has it just kind of been like the normal swing of things? Do you think maybe just more experience? Just dug into it. Just dug a lot into studying. Yeah. Swing model, you name it, and I'll explain. Oh man. About to make you freaking Einstein, ICT Einstein. We got this. 80%. Okay, cool. Because you told me what I need to go through, went through it, and my eyes opened up. Yeah. See, that's the thing. Sometimes you just need direction, on what's important. And then, of course, that's also something that, my live calls focus on. Because it's easy to get lost, may see an order block or something from like 5 months ago and think it's important because it may be close. Maybe it is. Most of the time it's not. Maybe you'll be focusing on these other things when you need to be focused on a different thing first because it leads to that other more advanced thing. But a lot of times we don't have that type of structure. Even going through the concepts or content on ICT's channel, sometimes it's difficult to figure out what is good for you where you're currently at. And I think that's something that this private community we have does very well at solidifying. Wouldn't be here if you didn't guide me to watch and learn and understand. Yeah, I appreciate you saying that, brother. I try my best, and I try to point out what's most important, what's going to be, especially for new students, I like pointing out exactly what's going to give you the most light bulb moments right away. So then you see like, holy crap, there's a way to organize this properly and learn quicker than I anticipated. Maybe not overnight, but it organizes your thoughts a little bit better. And then of course it puts you on the right path. So then you can end up doing it. And I'm just like a conduit, ICT says he's a conduit. Well, I'm also like somewhat of a conduit, trying to get you to gain clarity as far as what's important and, put you in the position so then you can take things and run on your own. Because that's the goal too, it's not to be subservient to me. I'm here to help you guys, maybe, become friends and whatnot. Or, it's okay if, there's students that come here, get what they need and leave, which has a lot of times been the case, which I have nothing against, eventually I'm going to want my community to be here because, they want to be here. They want to add to the value. They also want to be on this mission to help others. We become friends, maybe I'll come to Canada. I got some students in Greece, some in the UK. I got some in, where else? Where else are some unique places? I had a student, one of my first 10 students was from Thailand. He was the first student I got funded, and it took him 7 months, and it was unbelievable. When he did that, I was like, holy crap. And that's what really got me focused on, okay, how can I really, really improve and help others get there quicker? All of us will come to... Man, one of these days I'm going to come to you guys. I still got to go to Greece. I've been trying to go visit he's one of my first students too. He was with me from the start. His name is Fotis. He just had a baby, which is pretty amazing. But he's been telling me to come to Greece, and I've been slacking. I got some in the UK that have been asking me to go. I don't really like the UK right now. It's kind of falling apart, sadly. It's kind of dangerous. Where else? I had someone in Thailand. I definitely want to go visit Thailand. It's pretty beautiful out there. Very cheap. You could live like a freaking king off like $500 US. Where else? If you guys know anywhere that is unique that you guys think I should visit, or maybe where you're from, just leave it in the chat or send me a DM later. I have a little list of places I'm trying to go to. Dude, Bali is beautiful, dude. Super. Man, one of these times, maybe in the near future, maybe we'll set up like a group travel, like a little expedition for us all to go on to somewhere nice we can make a decision on. Maybe I could treat you guys to that. I'd really, really want to do that for sure. I think that'd be amazing. Just my thanks to you guys, you know what I mean? So yeah, because we're a family over here, right? So yeah, before I get definitely would be great and life changing. Yeah, Tony, that's definitely the goal for sure. Absolutely. But yeah, so getting back to some of the analysis real quick. DXY obviously came up, hit our target from the other week. I pointed out this fair value gap. I said my line in the sand was this weekly wick midpoint, and if it would have broken through that, my target would have been up here. Notice how we didn't even make it there, so the acceleration after this retracement was just spectacular. full targets got met, destroyed it. Mentioned that well ahead of time when we were all the way up here. So this will probably be where they look for because equal lows. And it's just beautifully played out. So nothing has changed, and it doesn't seem like it's going to change. We have this small little bearish order block. We just continue to move up. Let's see. We also have this down candle. We got a high breaking through that down candle. So now this candle here potentially will create a bearish order block. Bearish order block with these two candles, but it's also a bearish breaker as well. Let's see, is there maybe not the order block? Yeah, it's an order block right there. Okay, but yeah, if we go to the 2-day, see that this is a bearish breaker. So we're going to keep that in mind. As long as it stays below that, I will continue to see price want to go lower, because remember what we talked about early on about breakers and order blocks. So keep that logic we talked about earlier in mind. And let's just see if it can continue to hold that. We also have this weekly fair value gap supporting the downside delivery. Nothing has changed. And again, if we can get, only way that I would turn from higher time frame bearishness to bullishness is if we can violate this weekly fair value gap and get above this, and then try to use that as support. Otherwise, there's not enough evidence aside from that to change my opinion overall. It doesn't mean that some days won't be bullish to retrace real quick, then continue to drop, which may cause you to take a loss, if you try to sell in that environment. But again, you want to keep in mind power 3, you want to keep in mind where the most recent PD arrays are at, and you want to make sure that you are keeping your eyes on these different levels in here and intramarket relationships. Okay. Otherwise, if nothing changes, as it states here, the main goal is going to be getting down to here. But before that, we break this wick down into quadrants. We have 4 other targets prior to us getting down into this main goal. Sufi, yes it is. Yes, it absolutely is. You go to the daily chart, go up here, you take the high up here to the low. Beautiful perfection in optimal trade and tree delivery. 62% retracement level. Hit. We also have the weekly fair value gap high lining up with the optimal trade and tree level as well. Right, so it came to a premium, and then bang, this changed the state of delivery here. Respected the order block here as well. Respected the high of the fair value gap. Displacement breaking through this low. That's where my attention ended up solidifying down to these equal lows, and then of course last week flawlessly delivered down. Came into this little fair value gap here, but nonetheless stayed below this wick here and just kept pushing. Okay, so again, we will continue to have the opinion that this is going to continue to drop until we are proven otherwise. Okay, I'm going to take this off because now, I could just leave the equilibrium there if we want to, just to have completeness. Okay. But then, other than that, I have mentioned this quarterly fair value gap for literally weeks. Since we hit this quarterly fair value gap, I said this retracement back up to this weekly fair value gap will probably retrace up to there, and then it will reject, and then it'll probably use that to come down to here. Pretty fascinating how this whole entire move has been completely framed out in terms of delivery, to then look to target this from 5 weeks ago. So the whole scenario of what was going to unfold in the DXY has been completely navigated. If you go back to the videos I did over here in April, when we hit this quarterly fair value gap, this overall sequence of delivery was talked about, right? How price is going to probably retrace. If it stays below this weekly fair value gap and respects it, it'll probably use that to then target the low. And then the rest of the fair value gap on the quarterly chart, right? It just shows you the depth and effectiveness and the longevity of the way we do analysis. It's incredible. It's not just, once in a lifetime. It's every single month, sometimes for weeks in advance. And then of course, just highly effective, and it continues to repeat. Again, I just want to give you guys one last reminder, because we're going to put a ribbon on it soon. If you definitely support the channel and you like what we do and you've gotten value, definitely like the video, subscribe to the channel if you haven't already, and spread the word to people you think that can add to the conversation or can get value from the content we provide. That way we could build the community with like-minded individuals, people that think just like you. And, it's something I just greatly appreciate. And again, I appreciate the time that you guys spend here with me. It means a lot, so I try my best to give you as much value as possible, right? So thank you guys in advance for doing that. But yeah, so everything, seems like it's going to continue. Again, this breaker should be able to hold price. If it doesn't and we start to violate, that's one PD array. We have a swing high up in here. That's two PD arrays. And if it just starts to really rampage through, we also have a new week opening gap in here. So before this weekly fair value gap even gets broken through, we also have this down wick here. So all of those levels getting violated would then lead us to possibly seeing price, looking to seek buy side. But until that was to take place, we're going to continue to support our downside narrative, because narrative doesn't change unless something changes dramatically on the higher time frame. And those things changing would basically require price to come up into here for us to make that opinion. So that hasn't happened. So we're going to continue to want to see price completely obliterate sell side, because that's just, it is what it is, So that's the opinion on that. Now we get to probably what everybody's been waiting for, what everybody waits for, which is the indices. Okay. So let's start from the monthly. Okay, so we see the monthly candle has set a high. Okay, we've swept a previous month's high. I traded into this large wick here on the monthly. So we got our monthly high here, current monthly low here. We got a fair value gap in there. Let's get this. Let's get this and outline that monthly fair value gap. See if I could find it. Yeah, right there. Okay, so that is our monthly fair value gap. We've traded through it. Remember this low down here? Did any of you guys remember what that traded into? And do you guys remember how we anticipated this? We anticipated the sell-off. For those of you that have been with me since before January, we anticipated and traded all the way through this sell-off, targeting all these different levels. Once price hit this level, what was that? Yes, sir, Sufi remembers. We hit that yearly order block and we anticipated the low forming, and then we framed out the timing in terms of the retracement, which then turned into an overall reversal. Yeah, the quarterly discount too. I think there was a quarterly fair value gap mixed with a yearly order block. And it was amazing. It's amazing to see how that analysis, both going lower up until it hit that level to then price doing what it's doing and coming to where it's at. It's amazing to see how that's played out, and just how in sync we have been every single step of the way, every single week for the most part in my private community, every single day, with the exception of maybe 6 days out of the whole year so far that we've gotten, completely incorrect. It's amazing. It's just a testament to what it is that you're learning, not only from me, but it's a testament to ICT's concepts, and it's just amazing. We got that monthly fair value gap. We got the monthly high here and the monthly low current. So those are the most recent monthly liquidity pools that are going to be significant. We can see that we took out this monthly high, so that is significant. So we'll move up. Let's kind of see what's going on in here. Let me kind of shrink that down a little bit. Oh man, so many. So let me get rid of some of this stuff in here. weekly bearish order block. We got a weekly fair value gap. We've been talking about this weekly fair value gap too. This weekly bearish order block. We also have all the quadrants, right? The the lower portion of the body, quarter point, 50%, 75, and then obviously the high of it. So as price prints higher, if it's going to go higher, which we may spend some time in here because it's going to cap the weekly range, the monthly range, I should say. We'll see if it wants to dig deeper. Again, there's a monthly fair value gap here. That's also coupled with a weekly fair value gap here. Okay, so yeah, I want to see if that's going to hold as support. Now, I can say that if this was to violate this monthly fair value gap, the volume imbalance here, and close below that, that would lead us to then potentially seeking some sell side a little bit deeper. We do have a large wick here. Okay, if you take that and you map that out or string that along over to here, we want to see if this wick delivery, which overlaps this level of price delivery, I want to see if that's going to act as support and then hold price. If it doesn't and price trades through all these levels and closes below this monthly fair value gap, that's what would trigger me to think the price is going to decline. Otherwise, I'm going to continue to press on forward and try to seek higher prices. Okay, I'm going to continue to try to press this, continuing to the buy side. It's in a market maker buy model. I've talked about that ad nauseum in my private community. This drop to go higher, we see there's an accumulation phase in here, which is the second stage distribution, which is what we're trading into. We had a first stage or a second stage accumulation in here, which you could see lined up with the first stage distribution. So I'm anticipating that any delivery that does choose to start to go higher from this area should be able to do so in a very quick, fast-paced capacity. It may take until NFP comes out because we're so close to the end of the month. It may need that sponsorship to then get us up above all-time highs, which is going to make a lot of people look real stupid in the United States. Everybody that was panicking, thinking the world was ending. It's going to be a funny reaction moment in history, that's for sure. But aside from that, that's going to be my anticipation. We have, again, the weekly low, weekly high. It may look to open up, sweep the low. Maybe it spends time in here, given what I just mentioned, the fact that it's the end of the month. Then it may look to go. But yeah, we're going to have to just wait and see. This weekly candle here from the previous week was a bearish candle. So we got that weekly low, weekly high. Those are the first initial targets for us to anticipate. And then, of course, this high is the current monthly high, if I'm not mistaken. Yeah. So this high is going to be significant. But again, it may need to drop down, sweep out some liquidity first, then look to go. Here, let me kind of clean this up. And then, maybe it's, like I said, maybe it's going to sweep this out, then go. But yeah, other than that, we have fair value gap here, which I have highlighted. Then we have the monthly one down here. So we got this weekly fair value gap. And then we also haven't even reached into this weekly bearish order block as well. I guess we have on the 2 week. So I guess it has hit. That's what's kind of triggering this reaction here. Because when you're going higher, an opposing PD array generally creates the rejection for a retracement. In this case, we were going higher, it hit an opposing PD array on that higher time frame, and that set up a rejection point, and price is now obviously retracing a bit. We'll see if that's going to lead to anything significant. My anticipation that delivery will be significant will come from us breaking down below this monthly fair value gap. Also, this is a fair value gap in here too, a 3-day fair value gap. So again, that's another thing that we're watching. We're going to see if that's going to hold price, which it should. So given the fact that we've already traded into that going into this new week, if we are going to see price want to rally here and continue the march higher, and then look to complete the rest of the market maker buy model, which I will pull out the different elements too, so you can see it if you didn't see it before, which is this candle here. In my private community, I was using this high to that low, so basically encapsulating both of these accumulation phases, and I dragged it out, or both these accumulating candles. I dragged that out, and then I also dragged out this retracement here that led to the decline, which ended up resulting in the smart money reversal down here. As a like this level was the first stage distribution, right? So accumulation on this side, but distribution on this side. You could see that beautifully played out fast, and now we're in this second stage distribution. So again, this monthly fair value gap is significant not only because it's a monthly fair value gap, but it's also in alignment with this possible market maker buy model second stage distribution delivery phase, which is what I'm favoring to see in price. And yeah, we'll see. We anticipated this retracement too last week. So, we've been in line with this entire run here. Some pretty impactful conversations we had in relation to this pattern in here, what's happening, and how we were able to anticipate the low, then follow through and target the high here, which is something we did. I think I mentioned some slight piece of information about that. I think we spent some time on it here on YouTube. But yeah, it's been a great deal of learning that was inside this. This is called a type 2 dealing range, which ended up in a reversal. Right? So yeah. So that's kind of my assumption of what I'm going to see, what I'm going to anticipate. This weekly bearish order block again has led to the retracement. The fractal high here, when you see a fractal high on the daily chart, generally the next 1 or 2 candles, sometimes 3, will result in a retracement. In this case, we were bullish, so it retraced bearish. What did that fractal high lead us to in terms of retracement? It led us to a fair value gap, a discount array. And it's probably going to use that discount array to then send price back in line with the overall narrative, which has been bullish, which is something we've been in line with since way down here. Before that, we were in line with the whole short. We anticipated the drop. When it dropped, we were able to engage all through this. You just have to go back and look at some of the live calls I did, and you'll quickly see that. And in my private community, I have recorded videos for that time period as well from being live. So yeah, the evidence is out there for those of you that are new. If you are new and you haven't been here too long, and you're wondering if what I'm saying is true, just stick around and you'll see. And who knows, maybe you'll be the next breakout trader, aside from these wonderful people that are here today, which are on their way. Let me look at the chat real quick. I see ES hasn't taken out the high. SMT perhaps. Yeah. Although it is not a swing point. There's SMT with YM. Yeah. Let's go take a look at that. Yeah, this SMT here is kind of interesting. It's definitely interesting. I would say, that. So again, when there's SMT, the way that you use it properly is if you see an SMT, say we're going to use this one, right? A bearish SMT. Do any of you guys remember what we use to validate SMT? Whether it's a normal SMT, or if it's an SM, or if it has just one or multiple SMTs, what do we use to validate whether it's going to be something worthwhile or not? Right, there's one thing that I'm looking for you guys to have picked up on over the last couple months. What is the one thing that we can use to validate whether SMT is going to be reliable? No, it's okay. I appreciate you mentioning that you don't remember. I need that feedback as well, so then I can know where you guys are at, So anyone else have a guess? Or anyone else maybe remember? What helps us validate SMT? What do we use? It takes It's taken. Nope. Nope. You got another guess, Sufi? It's not a... Okay, you said the violation of a PD array. Nope. It's something more simple than that. Okay, Sufi, 3 PDA. No, 95. That's a good guess though. Good guess. All right, so the way that we validate, for the most part, mind you, a lot of those things you guys have mentioned, they could be an added way, or like an added tool to use on top of what I'm going to tell you guys right here. And when I say, you guys are going to be like, oh yeah, I remember, right? So the asset that we use to validate SMT, when there's either one or two to see if it's going to actually be reliable, is the DXY. So if we have a bearish SMT, but DXY is rapidly declining like we see, it's a lot less trustworthy to use the SMT that we see, right? It's a lot like if this is going to be a bearish SMT, but DXY is declining, because DXY, again, is something that is extremely impactful. Who mentioned interest rates having SMT? Yeah, so the interest rates having SMT as well, that is very helpful when it comes to identifying where the DXY is going to go. And then, of course, as a result, that's going to really impact our opinion when it comes to the indices as well. Another thing with the interest rates, when you look at it from the higher time frame, when we go into a new quarter, when you want to make sure you're observing what the indices or what the interest rate markets are doing, because if there's a large time frame SMT happening, and we've been pushing in a particular direction, and it's maybe at a PD array going into a new quarter, a lot of times that can help you gauge a quarterly shift for whatever asset you're looking at that's impacted by the interest rate markets. Okay, so an SMT on the higher time frame, when you're looking at the interest rate markets, can help you gauge if there's going to be an overall shift in sentiment when we go into a new quarter, right? So that's another thing that's a good study. Obviously, it's super higher time frame, super long term, but over the years, if you just implement this as a quarterly process, because we have a weekly process, a daily process, monthly process, and a quarterly process. We even have a yearly review process, but that's kind of separate, I guess you could say, right? But all these different moments in time require you to do specific work. So then you can prepare. Most people, they don't have this this type of process alignment, but now you guys know. I think I have mentioned some of them before. And every single month we do a monthly review. Every week we do these calls. And then every day when we hop on, we have our specific process as well. But yeah, there's specific things we got to do for specific times, whether it's a quarter adjustment, whether it's or preparation, whether it's a week, day, or monthly analysis process for preparation. But you want to make sure that you're incorporating this into your trading plan, right? What do you look at when the new month starts? What are you identifying when the new week starts? What are you doing when the new day starts, right? What are you analyzing, right? And what's important right when you sit at the chart, right? You got to have a answer for that, for all those different questions. If you guys don't have full-on descriptive answers to that, you could, maybe we could do a video of some kind. I've done some of those in my private community. So those of you that are in my private community, just hop in the mentorship call section, and you can go download those videos. The correct top-down process. So everything that we do here on Sundays is basically describing that. Every single week, that's our weekly top-down / weekly preparation process, where we start, what we're looking for, the assets we have, how we start from the news, the conversations and perspectives we have around the news, through the interest rate markets, what that impacts, what's important, where those are going to go, then to the currencies, then to the DXY, then to the indices. And then, of course, obviously, we're looking for, monthly highs, monthly lows, the whole list of liquidity pools that I mention all the time. And you just take it like, monthly highs, weekly highs, daily highs and lows. You map those out, and then you figure out where the most recent liquidity is at. If you're trading on Mondays, you got Friday's high you need to pay attention to, right? And Sunday as well. And then the previous week's high is generally the current week's target if we open up inside the previous week's range, right? So these are all things that we talk about on a regular basis pretty much every week and highlight. So the correct top-down process is essentially encapsulating every single thing that we mention in these Sunday calls. So does the top-down differ slightly or stay the same? So it stays the same in terms of what we're trying to identify, but sometimes the liquidity that we're identifying is different, but it's still on top of the list of liquidity pools that I've mentioned. I've actually given a PDF about it as well. I forgot which video it was. I think it was in the Keys to Daily Bias situation. In that Keys to Daily Bias video, I also talk about some of the most important things as well. It's pretty much just doing all the same stuff that we do on a regular basis, right? But yeah, so when you're on the higher time frame, obviously you're going to want to pay attention to the things that are relevant to the higher time frames, like the monthly highs, monthly lows, weekly highs and lows, daily highs and lows, and then of course the new day opening gap, new week opening gaps, regular trading hours gaps, session highs and lows. Those are all important for like more lower time frame view. But when it comes to the higher time frame, you're looking for PD arrays that are in close proximity, that are reasonable. Like this isn't reasonable for right now, right? It's more reasonable for the target to potentially be to fill the rest of this in, or to fill in or attack the previous week's high or the previous week's low, or maybe even try to get down to this, right? This all down here would be unreasonable. This up here is unreasonable unless we start marching towards that direction. There's other more near-term things that we can pay attention to and map a setup off of, and be able to have a bunch of opportunities on our way to this potentially being our overall terminus. Okay, so yeah, does that make sense? Hey, what's up, Adam? What's up, brother? I was wondering where you were at. I was like, where's my boy? But welcome, brother. Glad you were able to make it. But yeah, Fritz, does all that make sense? Each element that I just mentioned? Because that pretty much encapsulates a lot of the important things. And then what I just like quickly laid out right there about like what you're looking for when you're on these higher time frames, whether it's a monthly, weekly, or daily, that being previous highs and lows, most like the closest, most in most proximity PD arrays to where we're currently at, and of course the previous weeks, like Friday, sometimes previous weeks like day, right? Like there's a Monday, Tuesday, Wednesday, Thursday, Friday of last week. Sometimes if that's in the crosshairs potentially, like if we're going to retrace and we've been bullish, those may end up becoming targets as well. But that in the grand scheme of things may just end up being a retracement to then go higher if we're bullish. And then of course you flip it over if you're looking for the opposing view, instead of going higher if you're looking to go lower. Okay, cool. I'm glad that makes sense, Fritz. Again, that's a huge leap forward. It's a very consolidated, very down and dirty, like this is what's important way of viewing top-down analysis, liquidity mapping and targeting and what's important, and then just overall framework of draws on liquidity. And remember, price is only going to do one of three things. It's only going to either create or rebalance an imbalance, attack some form of a higher low, or it's going to consolidate, right? Or, of course, if we're talking about the imbalances and stuff like that, it may also reach into a daily order block, maybe one of the other PD arrays. But for the most part, if you could keep it simple as possible, you could think imbalance, right? So it's either going to attack some form of a higher low, it's going to create, rebalance, or retrade to an imbalance, or it's going to consolidate. And those three questions, if you can answer one of those three questions and then incorporate the things that I just mentioned, that little list I just gave you, you have a very down and dirty, easy way to start to slowly map out liquidity and how price moves between the ebbs and flows of the delivery it provides. And then over time, right, you'll just see it's super super obvious at times what it's going to do within the framework of what I've just mentioned. And it makes bias and narrative a lot less ambiguous, you know. So yeah, Adam said he was working. I think we just defined a bearish market structure in DXY and a bearish in DXY. Yeah, we've been talking about bearish DXY since. Well, we've been talking about bearish DXY since we were over here. Actually, we called this entire decline here. You're a little bit new, but we literally, for those of you that have been with me since back here, we called this entire market maker buy or market maker sell model all the way down to here when we were all the way up here, right? If anyone was here while we did that, let me know in the chat. I think some of you guys were here when I was calling this as a market maker sell model. Way up here. We've been bearish ever since. Yeah, let me know in the chat if some of you guys were here from that time. I think you guys were. Some of you guys were. Yeah, just let some of our new family members know in the chat, if you were here, how we walked this entire market maker sell model. And then now we're still continuing to walk that to the downside. I'm talking from last bullish movement. Oh, yeah. This retracement into this weekly fair value gap. Yeah, we were talking about that too, for sure. I think you were here for that. I think you were here for this one. How price ran up into that and then rejected from there. Last 2 weeks, there was a very bad. I mean, it was reasonable. It was the difficulties definitely elevated because all the geopolitics have been taking place. Yeah, Nutty Fuffa was here. How long have you been watching me, Nutty? I think you were here like in January, February-ish. You've been here for a while, for sure. I definitely, yeah. I think I remember you asking me some questions back in February, March. Yeah, for sure. Yeah, you were absolutely here. Yeah, you were here for pretty much the whole thing. And yeah, so Fritz was here too. Fritz was able to watch us call this retracement up to here, then continued decline. I called the market maker sell model in this as well within this larger one. There was also an inversion fair value gap we used somewhere in here that was used to reject this to go lower. But yeah, yes, and definitely witnessed it and benefited from the education of it. Yeah, beautiful. Awesome, Tony. Yeah, it's amazing. People, new students that come here, it's sad that some show up and I'm not giving signals and they dip out. But those that stick around for like, a month or so end up staying for, at this point, there's some that have been with me for 3+ years. Just off of that 1 month that convinced them just by seeing price action and knowing that, we're able to talk about it in more layman's terms for the most part. I'm grateful that you guys have gotten to benefit from that and seen it. This is my 3rd live, but I watch more than 15 videos. Wow. Amazing. Amazing, Adam. I appreciate you doing that and checking out some of the depth that we got on the YouTube channel, for sure. But yeah, if there's ever any concepts that you have struggled with or still struggle with, again, you could just voice them. No question is stupid. Sufi, you get signals. Well, for Asia, I'm not really sure. Generally, I stay away from Asia, but you're a savage, so you go in there trying to knock people's heads off in Asia. I seen you doing some pretty spectacular things in Asia too, which is something to be applauded, that's for sure. But yeah, technically in DXY, I did give a signal. Technically in the currencies, I did give a signal. I said if it stays above these levels, it's going to continue and target the buy side, which it did. And, what else? No, you explain very well the market. Oh, I appreciate you saying that, brother. I try to keep it as simple as possible, and I and I just you know, Sufi, you're yeah, Nutty Fafa, he's joking, I promise. Oh man. But yeah, Adam, I appreciate you saying that. I definitely try to keep it as clear as possible, and you know, I make sure that the things that are talked about are heavy hitters, especially like days like this. Like today, I talked about something that most people don't know that have big channels. Most people don't know that a lot of PD arrays lead to balanced price ranges. So yes. Oh man. But yeah, I'll have to second that opinion that I hate signals. But there's nothing against people that actually know what they're doing that sell signals. I mean, who knows? Maybe some of you guys will turn into signal providers, and as long as you know what you're doing and you have more integrity than everybody else, which all of you guys already know, you have. There's nothing to think down upon, because some people can't trade, so they need people that are reliable that can give them signals. So don't ever just close the door on it, and keep it open. Oh yeah, Adam, I was telling you about Gary Vee last time, huh? I told you you're gonna love what that man has to say. His perspective makes us view the world a whole lot more reasonably, and it makes chasing our dreams a lot more manageable. It allows us to be more confident versus always being interrupted by the negative thinking. And just thinking, this, or thinking, that negative, So yeah, I'm glad you dug into Gary Vee. He had good marketing at the same time. Yeah. He's a marketer at the end of the day. He has his own company, and he was an early investor in Facebook and some of the big companies like Amazon and different things. So that's where he got his wealth from. And then of course his family had a wine business. He blew up his dad's wine business through the marketing tactics he learned. His story is amazing, and he didn't become successful or seeing any success till like his late 30s, mid 40s. So yeah. You need to start signals. Oh man, see, that's the thing, man. You never know what the future holds for each and every one of you guys. Who knows? Maybe you guys will come out here and be the number one signal providers that are actually good. I have like 7 friends that only sell signals. They don't see themselves, they don't see themselves teaching. It's just too complicated. It's just too many things. It's too draining for some people. And there's nothing wrong with that. That doesn't mean you can't turn things into other businesses like signals. If you're good and you come out and do what we do, like I could easily turn around, flash the big, $5,000-$10,000 days I have, and then just flip around and start doing a signal service, cut off all mentorship, and make hundreds of thousands of dollars. Because it's so obvious that I'm here in front of everybody, and then you guys are also blowing up with this stuff too, that it's gonna become like a drug to some people, But I don't like signals. Okay, I'd rather teach you and get the satisfaction of seeing you guys thrive versus me just selling some signals. It's just I could just just ride off into the sunset on my own and just not have any other stuff to do. But that's a boring life. I think that's boring. But yeah, the impact to me is more important than anything, because I remember how much I've struggled when I was younger, when I was doing this, and it is amazing. So I know people that had drop shipping channels, signals that made, yeah. That's the thing. There's so many ways that you can turn this into a business. Aside from, but the main thing that it all comes back to is you actually knowing how to trade. Some people do it even though they don't know how to trade. They sell a course or whatever, and they don't even prove anything, but they go rent a Lambo and everybody gets fooled and buys it, and then they become this huge influencer, and they still don't know how to trade. You know, it's ridiculous. It just shows how gullible some people are. And those same people that get fooled by that stuff are the same people that hop on my videos or anybody else's videos that are actually giving them like clear value and gems, and they just get off because maybe you're talking about psychology, or maybe you're just not, calling out a signal in a live call that in 5 minutes they'll just hop off and go, try to find someone that is, even if they're going to blow their account as a result. I mean, it's incredible. It really is. But, that's why I'm fortunate to have people like you guys come. And that's why I always tell you guys, if you can go and maybe have friends that trade that think like you guys, I always recommend that, if you guys have anyone that likes trading, that wants to learn, that you think can get value from these videos and spending time with us, I definitely invite them to come and add to the community or, add to themselves, but with the content, because it makes it a better, more dynamic community. I feel like having the skills to read the price is better. It's a better price than money, because the feeling when you get the money from the markets without struggling feels good. Yeah, and just knowing that you did it on your own, and you know that your success is not strapped to someone else. Because at any moment something can happen to anybody, and people may not be here. Something may happen, and if you put all your eggs into someone else's success, so you can ride that success, so you can be successful, and then one day the plug gets pulled because maybe they get off social media, maybe something happens to them, maybe they have different plans or go do something else, and then all of a sudden you're left in the dust, and now you're scrambling because you didn't spend that same amount of time actually learning so you can be self-sustaining. You ended up being stuck to this other person. You gotta make sure that your priority is in the right place. And 99% of the people that are only looking for signals, that can't sit through important conversations, that don't include when to take an entry, they're going to be the same ones that blow their accounts and call this industry a scam and give it a bad name. Or go follow somebody that has a course and they've been trading for like 2 weeks and they just rented a Lambo and they're scamming them. And once they get scammed and can't succeed, they, attack every mentor and don't give anyone the time of day. And they just cause a huge freaking stain on the industry, So, trading's not for everybody, but for those that are willing to sit through calls like this, those that are willing to sit through ICT's videos, those that find enjoyment looking at price and having these types of conversations and watching live price action and going in there and studying and not getting sick of it, those are the ones that this is for. And that's why those are the same students that end up thriving eventually, even if it may take them a little longer. They'll eventually get there because their mindset's in the right place. Mindset's half of the battle. The rest of the other half is, like risk management and, process and having the right information and experience. Let me see. To be honest, I love psychology side of. I appreciate that, Sufi. I definitely. It's definitely been a journey to get my mindset where it's at. I've had to overcome a lot of previous programming, a lot of bad habits and negative thinking. Life hasn't always been too nice. So as a result, kind of put some baggage. But yeah. So again, we kind of hit this retracement, right? So there was that fractal high, we got that retracement. So in order for me to want to really try to position into a further buy, or for us, right, if we're going to, observe this very similar things, I would really like to see us prove that it wants to reject outside of this fair value gap, maybe get above it, use it as support. Again, we're looking for that market maker buy model scenario. But if that was to fail, say price, violates down through this area in here, and just like really, really starts to attempt to and break these levels, then that SMT may become a whole lot more important between the Dow and the other indices. I don't necessarily think, at least for now, it's going to be too impactful because of what DXY is looking like it wants to do. Looks like it has a bearish breaker. If we go to the indices, it looks like I mentioned earlier, we have a bullish breaker here. But before that, we have the bullish market maker buy model and this fair value gap, right? So it's going to have to violate these levels in order to turn off my interest to go higher. That has not taken place yet. And again, we have this fair value gap. So I'd prefer, honestly, to see there's equal highs here too at the highs. So if we can get above this, like get displacement, if we could maybe open up, stay above the midpoint of this wick, respect that midpoint, maybe use the fair value gap in here as a support level, leave this low intact, and push higher. That would be the ideal scenario. It may open up, try to drop a little bit into the wick. Maybe it does open up, drop, and take this low. Maybe these other ones don't do that, and they make a failure swing and then displace higher. That would be a good scenario too, to try to position for a further buy. But yeah, so that's going to be my opinion. Again, I don't want to see this fair value gap broken. I don't want to see this fair value gap broken. And I definitely don't want to see this volume imbalance taken. If we get down through that, again, we may be in for a little bit deeper of a retracement. Or, it may result in a further decline depending on what happens with the interest rate markets as well. But none of that's taken place yet. So what we're looking for is continued buy side. It looks like we have just basically delivered a retracement in a bullish trend. And we're going to treat it as such until proven otherwise. The up movement here, if we go to these upper time frames for the S&P, you could take this candle here, this up candle, mix with this fair value gap. That's a bullish breaker with the fair value gap. So it's going to have to stay above that. So if we have this fair value gap here on the S&P, staying intact with this up candle here, that's the bullish breaker. But if that stays intact and then we displace, again, we're still in line with price trying to go higher. Maybe it's going to reach up into this level, take out these highs, this high, potentially. But if we violate that level, this will probably turn to an inversion, and we may look to try to dig through some of these lower levels. Okay? So, yeah, I hope that makes sense. And you guys understand kind of where I'm coming from. Just take one more look at the chat. So right now we are at OTE for a bearish move. We could go at least to equilibrium. There is an order block down there to test. Yeah, there's nothing to continue unless it provides me more evidence. Now that is the case, that is a possibility, Sufi, but given the overall landscape of the fundamentals, the economic status of what's taking place, all the positive news coming in for the US dollar and just the US economy, just the simple response that we've seen and kind of what has transpired here, we're going to need a lot more evidence than this S&T for us to then look to want to go lower. Okay. We need a change in state of delivery. We need a break in market structure because we've been in a mode of buy-side delivery, pushing all the way up into this PD array, which has then obviously rejected us. So we're going to see if that does come to fruition, which it may, right? It could very well if the interest rate markets start to get into alignment and push the DXY into that yield relationship, which, if we see things get back into correlation, this is going to lead to DXY exploding to the buy side. And then in that case, we may end up turning this decline into a market maker buy model, which is a possibility. That's way ahead, right? It's something that could happen in like the next month or so, depending on how things transpire. If we get all these good trade deals, that's going to be good for commerce, which may end up being good for companies, which then is a positive thing, which is why it's the main catalyst as far as why the indices have been exploding to the buy side, why they rebounded so aggressively at a specific time. What was that specific time? When the trade tariffs came off for a paused amount of time. Okay? But then ever since, good news has been coming out economically for companies. So price has been continuing to rampage higher, getting us right back to where things were initially. Just was under. There's no logic, still bears. Maybe we can see a retracement Wednesday and make a Wednesday low weekly profile. Yeah, I'm looking for us to possibly leave this wick intact. Maybe open up, drop a little bit deeper, maybe test the fair value gap one more time, but then fail to get down below the wick and then displace and get above this. That would create a bullish order block and a failure to trade through the middle portion of the wick. Those are all signatures that would be very, very supportive of us wanting to go higher. Aside from the fact that we're in a structural, like, bullish environment, at least for now. Or another scenario could be we open up here, drop lower, sweep out Friday's low, don't close below it, and quickly trade back above it with a wick just to stop these people out, which in that case, if we were to do that and then get above this high, creating that order block, that would just be basically a purge of liquidity down here into the bullish fair value gap once again. So basically to put counterparty to smart money buy positions, and then we would see price want to run higher. That is what I'm going to favor. One of those two scenarios, in my opinion, is going to take place. So that's what I'm going to look at. And then, of course, we can get above this order block, maybe take this low or fail to. Either way, if we reject off of either of those scenarios and get above this, that'll put me in a position to want to target the buy side here, maybe even up here. And then, of course, if we can get above this fair value gap, that would also be a good idea too for us to use as a reclaimed fair value gap, and then look to frame setups that we like inside that framework to then go higher. So yeah, I don't have, but if you use OT lows, I recommend you trade in sync with the daily 4-hour, 1-hour market. Yeah, that's a pretty good opinion Adam just shared. Even if we go towards making all-time highs, we still need to go down first before going up. So technically, if we are unfolding inside the market maker model framework that I've been structuring this whole run higher on, which is the consolidation up here, accumulation first phase, second stage accumulation, smart money reversal down here, first stage distribution, okay? Second stage distribution being these areas in here. The characteristics of a second stage distribution would basically remove the need for price to want to go any deeper than it has gone. Because if it is a true second stage distribution, this is what's going to be very important about this coming week and what happens from here. Because you mentioned the optimal trade entry possibility on that weekly or the higher time frame to go lower. Well, this here is going to determine whether that's going to either unfold and turn around completely, or if we're going to continue to go higher. I'm going to favor, given what we've seen so far, this market maker buy model, because every phase has basically delivered up until this point. And this is not really much of a convincing factor telling me that it's not going to go higher. So as long as we stay within this area, given the market maker buy model structure and the framework that we've outlined, I think that we may not have to go down into these levels. That's why I didn't really mention it down here. And then if you go like this, right, you take this break, because this is a breaker here, these up candles. If we go like to the upper time frames, weekly and stuff, this is a breaker. Notice how the upper portion of that closed in most of this lower portion. Okay, so what does that create? That creates a potential for a balanced price range. So it may not have to come all the way down there. It may leave this available. That's another gem. If there's things trading through lower portions or upper portions of a fair value gap, most of the time that upper or lower portion that has price action trading through it previously, like a wick maybe or something, that'll be a reason why price leaves that portion of the fair value gap open, right? So yeah, that's a little banger gem right there. So yeah, keep that in mind in terms of balanced price ranges. So yeah, we're going to see if that's going to unfold here. And yeah, that's kind of like the perspective and framework I have as far as, what I believe price is going to potentially do. And remember, if this is going to be a market maker buy model as it's been delivering because of the first stage distribution in here, we're not going to want this second stage distribution to hang around too much. This is already a bit much, okay? Like, luckily, it's still inside of that area of distribution that I'm anticipating. If it wasn't, if it would have traded outside of it, I would not be trusting this to go any higher because it would possibly fail to deliver the market maker buy model second stage distribution in this case. But it hasn't, so since it stayed in that, we've already taken this upper daily fair value gap. So now we're trading down into this fair value gap. And in order for this framework that I'm watching to take place and push us higher, given the context we've been talking about, it's going to have to either reject this wick because we've already somewhat traded into this, or maybe sweep down one more time if it wants to purge these guys out and put them on the opposing side of a buy position, and then give a very strong reaction after that takes place. Because if they are gonna do this and trade below this low, it should only be in the capacity where they're gonna run down, trigger them in, and then quickly get back above to give nobody a chance to get back in. Because that's what they do. They trigger in sell side for those that are trying to short, and then they rip their face off back to the buy side. That's what the manipulation does. That's what its purpose is. And same thing with buys, right? It ran up above highs, triggered in people trying to buy, thinking this is going to turn to support, right? Support turns to resistance, resistance to support. And then it just rips their face off going way deeper than what they would have anticipated, right? Which in this is the case when it comes to this area, right? For traditional thinking, right? We're weaponizing it against them. So yeah, it's kind of my opinion. It's pretty much all I really have for today. Yeah, hopefully this stuff has made sense for you guys. Maybe just the week of the candle touches. Yeah, I mean it could wick through that. That would be that still wouldn't be unreasonable. Remember, so we got this low down here to the high of the candle up there. That is my well, actually, let's use the blue candle to blue candle. Okay, so those are the two possible distribution. The reason I'm using two is because I can't 100% guarantee that it's going to be either this one or this one because they're in such close proximity. So I'll just use the entire range to create that second stage distribution idea, or to map it. Because it's going to be one of those two. If it is going to be correct and it is going to be what we're saying it's going to be, which I believe it could and should if we're going to continue, then it's going to stay above these levels in here. It's going to not break through. That 2,500 level is still inside the second stage distribution. I would much rather see it respect the midpoint of this, treat it as fair value gap or like an order block. I want that upper portion to stay respected. It could attempt one more time to do what I mentioned earlier and maybe trigger these people in. But then if it does do that, I need the response to be very quick because I want to rip people's face off that are going to try to short that because, you know, the overall framework here looks like it's still going to be bullish. And my initial target is going to be each previous day's high from last week that you see here, right? Friday, Thursday, Tuesday, Monday, and then, you know, Sunday is not really much. It already got taken. But this is the previous week's high. So that will be my initial target outside of the previous 3 days targets from last week. If we can see price give us that strong rejection off the framework of this being just a retracement in a second stage distribution framework to then look to blast off from the daily fair value gap up to this weekly high on our way to potentially finishing off this market maker buy model. Right? And if this does occur and get all the way up here, those of you that have been with me that have been walking this market maker buy model all the way down to the low and then all the way back to the high if it gets up there, you're basically going to have witnessed, as many of my older students have, me mapping out an entire couple of months of price action all together, right? Like as we go, one area to the next area to the next, and then how that transpires all the way back to another very large time frame, and then how we navigate that on the lower time frame. it's going to be a spectacular experience. Hopefully, all the stuff you guys have seen so far already has been pretty amazing this year. I mean, it's been a very surprising. I mean, I kind of expected the chaotic volatility, but yeah, it's been one of the quickest banger starts to a year for me and a lot of my students in my private community. It's been the best one out of the last 3-ish years that I've been publicly teaching. So yeah, it's been pretty dynamic, as it should be given the volatility, but it has definitely been a bit unforgiving for some of you, and for many students that are new. So just keep in mind the risk control, risk management that we talk about, and as long as you follow the risk rules and have the right expectations, know this is going to take you a little while, you'll be fine. There's nothing to fear. Engage when you see what you see in price, and just have no fear, because fear don't make no money. And if we're not willing to lose money, knowing that that's part of it, I mean, we got to kind of recalibrate what we're looking at here, because we're all going to lose money at some point. It's just how you lose money, and whether you can learn to lose less money as you progress, because it's always going to be part of the industry. There's no perfection. I'm not perfect. I took 2 losses last week with my my private community, but we quickly made it back because we're not worried about it, and we don't let things phase us. Greed don't make money. Yeah, true. So greed doesn't make any money. So with that statement, you want to make sure you're targeting minimums. As I show on a regular basis, it does enough. Trust me, 20, 30 points in the NASDAQ can make you quit your job. And it can build wealth, and it can take you to buy a Lambo, and it can do anything. Or it could simply make you just live a decent life, out of the spotlight, just not needing a job. I think that's a worthy goal, aside from, these big materialistic goals. Buy back your time so you can spend it with your family. I think that's a more noble goal than trying to go out and buy a bunch of flashy things to rub in people's face. You may be able to do that, some here or there, right? If you feel like it. But make sure the main goal, is, something more noble than that. 30 points, I target 75. 75 is, you want to realize too that 75 was ICT's weekly objective before he was teaching. 75 pips a week was his weekly one-shot kill objective, and that's part of his one-shot kill framework. 75 pips a week, right? Not per trade. You'll get good enough to be able to target that, but again, that's going to require a lot. It's going to require a lot of higher time frame framework, patience to let that unfold into the higher time frame levels, and then you got to have the ability to go in and execute it with the right timing throughout the week, to then target something bigger like that. So yeah, you always want to start at a minimum, 20, 30 points in the NASDAQ, and you could make it happen. It's the same in Forex too. You're going to need 25 to 50 pips, I think, something like that. Of course, it depends on your lot size too, and what you're trying to risk. It all varies. But yeah, if you take one trade a week, less is more. But make sure your framework is not stuck on the lower time frame. Make sure you have very strong higher time frame framework and be rooted on that, and then just wait for Tuesday and Wednesday to be able to execute. Let Monday and Sunday manipulate, get into some form of a PD array that you can set your sights on for an entry. If it's below the open price and you're in a PD array that you're assuming can go higher, execute. Just throw a decent stop on, and then target, like a previous week's high or previous, day or month's high, depending on where we're at, and then just hold that throughout the week. Just forget about it. But of course, if you do that, your stop's going to have to be bigger. You're going to have to compensate with your lot size, so you're not going to risk a lot when you're doing that. And the 1% is going to be needed. or less. You know, if you have less than 3 years experience, you should definitely be trading less than 1%. It's not something people want to hear, but I mean, if some of us look back and we were risking 1% and we took extreme damage and now we're in massive drawdown or in debt potentially, it probably would have been the best idea for us to listen to that. I know it would have been for me, that's for sure. This is your last week too. Oh yeah, I remember. Yeah, I remember. I seen it. I seen it in my DM. You out here smacking it, dude. That's amazing. 6% is amazing. See, when you're able to get 6%, you can take that and just stop for the month. 6% a month. If you expand that throughout the year, if you can do that month after month, 6% a month after 12 months doubles your account. Right? So if you have 5,000 and you get 6% a month, it doubles your account. So you'll have 10,000. The 10,000 would turn to 20,000 in year 2. 20,000 would turn to 40,000 year 3. 40,000 turn to 80,000 year 5. 80,000 turns to 160,000 year 6. 160,000 turns to 320,000 in year 7. So that's less than a decade, and you can make a ton of money off of 6% a month, starting at $5,000. But the discipline and patience you need is obviously very much required. I'm in prop firm. I was thinking to do that with $1,000 to $1 million in 10 years. Yeah, you could. You very well could. That was ICT's plan. That's what he planned to do. You could do that. That's the thing. You got to set your goals, and they got to be reasonable. That doesn't mean that that's going to potentially be the only goal or framework to the goals that you have as you improve. Like, you'll improve, and the more you improve, the more you'll open up your horizons to what's possible for yourself. And then you can just adjust as you go. Maybe early on you'll be risk adverse. Maybe later on you'll be able to risk, 2-3%. I wouldn't recommend more than that. Some will do more than that. And maybe they win, maybe they blow out, but it's best to probably keep it below 2.5% max. And some will never get to 2.5%. They don't need it. And they could still do very well. Yes, I read all the PDFs. Yeah. He has a calculator too that he gave all his charter students. I think I still have it somewhere. It's like a wealth generation calculator that he created. I need to see if I have. I think I had it on my laptop. I don't know if I'm able to bring it onto here, because when it downloaded it, it turned it into numbers. I don't know if there's like a thing that can transfer it from numbers to Excel. I don't even know if there's a thing that can even do that, unfortunately. If I find something that is, maybe I'll get what he gave us and maybe share it with you guys. I can search PDFs with if someone wants. Yeah, you could do that, brother. You're in the free Discord, so definitely share that if you want. I'm sure somebody will appreciate it. I put one video in my YouTube channel. Oh, nice. Yeah, it's definitely a vast amount of stuff that's just so amazing. But yeah, guys, I don't want to take much more of your time. I've kept you guys here for about 3 hours, a little bit over what I wanted to do, or a little bit longer than I wanted to keep you guys. But I appreciate you guys spending time with me this week, or today, on this beautiful Sunday. Again, if you guys get value from the content, don't forget to like the video on the way out, subscribe to the channel if you aren't already, and let your friends and family or anybody know that you think can benefit from the content. Let them know what we're doing here, and if they can add to the conversation, definitely invite them as well. We always want good people here. And I hope you guys got value. We will be back live on Tuesday for the YouTube channel. And for my private community students, let me know if you need anything today. I'll be free today to be able to hop on. Or otherwise, I'll see you guys on Monday. And yeah, let's have an amazing rest of the month. Don't do anything stupid. Keep your risk cut to half because we're at the end of the month. And let's see if we could squeeze a little bit more out of this lemon going into June. All right. So God bless you guys. Let me know if you guys have any questions. I'm always here to help. And yeah, I'll see you guys on YouTube on Tuesday. And I'll see my private community on Monday. So yeah, God bless you guys. Take care.